I want to welcome everyone to the Crypto Kingdom. This is London, Crypto Kingdom with a K. Thank you for tuning in. I'm a former financial professional, lead analyst over a $1 billion equity fund, and I'm excited to come to you tonight and talk about crypto. We're going to go over Bitcoin. We're going to go over a lot of different of your investments, and will not be investment advice, but it certainly does not mean that it will be inaccurate information. I pride myself on my accuracy. I hope you guys have had a wonderful 4th of July weekend, and we have this channel, and as part of the channels, we have VIP levels of membership. You guys who are already members, we have what is it? 100, over 100 VIP members during the first month. So that's very exciting. We have investment professionals, investment bankers, all types of individuals. You guys are consummate professionals, you're ladies and gentlemen, and I intend to continue to treat you just as such. It's a pleasure to have all of you. Now, as we look at what's been going on with Bitcoin, we have kind of an exciting day in terms of pricing. Hopefully, if prices do go down, you have been reserving some of that backup cash so that you can deploy that cash at lower levels. That's kind of the general idea that I hear from you. I'm excited to continue to kind of reinforce those principles along with some other principles that you guys may have in terms of your investment protocol. I understand that a lot of you are some sophisticated investors. We have members, some VIP members who have done extremely well in crypto. They are truly VIPs with 6 or 7 figures, 7-figure accounts, etc. In crypto that have they've achieved extremely phenomenal returns. So welcome as you're beginning to filter in. We welcome you and hope that you would just join into our chat and give us a shout out and let us know how your July 4th has gone. We're going to be covering some of the fundamentals today of technical analysis as they're presented by the New York Institute of Finance. I'm not affiliated with any NYIF division or et cetera, but I have been studying their information for about, in addition to my certification in markets from Duke University, I've been studying the New York Institute of Finance materials on technical analysis for since high school, I'll say. So I am no neophyte in that, and I look forward to bringing you guys some accurate information this evening. Standardly, we go through some streams for a while. We'll talk about Bitcoin for a good period of today. I also want to touch on altcoins. We will make a determination, if possible, in terms of what are the best coins to trade right now, because I know a lot of our members are they're in the market to trade, period. So we take that very seriously. I'm consistently trying to come up with new coins for them to trade, even on an intraday basis. If not, we're not big on just holding. We don't get any credit or prize for major retracement and loss of account or coin value. That's not what our goal is. But definitely in terms of the discussion of where's the price action, we want to find it. I found out about, this morning, definitely brought to y'all's attention, to the attention of the VIPs, brought to the attention of the VIPs, the OCN, and I brought that to their attention about 6 a.m. Since then, it actually went up about 100%, so that was some real price action, depending upon which exchange you were on. So congratulations to anyone who got involved in OCN. That went just gangbusters, went very well. So looking at Bitcoin, we will discuss kind of the fundamentals of technical analysis again. Let's start with this symmetrical triangle that we have. Let's go in the context and kind of pull back out. We have the symmetrical triangle. Anytime you see a symmetrical triangle, it's going to be a continuation pattern, essentially, okay? This symmetrical triangle is going to be considered a continuation pattern. What does that mean? That means that wherever, let's say if it's part of a downtrend, if it's part of a downtrend, which it is, we're part of a retracement. We're experiencing a retracement in Bitcoin. If it's part of a retracement, that means that it's a continuation pattern, and we can expect it to continue to the downside. So I brought that up to people's attention yesterday in the post in Twitter. If you guys aren't on Twitter, please follow us. We're The Kingdom, you guys, THEKINGDOM, and we have a lot of success in terms of bringing alerts to people in terms of their assets, so you guys must know that. So welcome. I hope you guys had a great weekend, and you're still having a good weekend. I hope everyone was safe and that you've had a good 4th of July. We've seen kind of a major breach here, I'd go ahead and say, of what has been established as a trend line here. A lot of people are discussing this. I've seen it. I brought it up last night in the context of the fact, people are going and taking out huge long positions. Please listen to this. People are taking out huge long positions here, right? Just because we broke, and you guys can see what we broke, right? We broke this small level here, which is established by the 2 trend lines here, and I'll agree with them that yes, there is a trend line here. That's fine, but the problem is everyone just took out a huge long position, guys. Literally, the guys in Dubai, the Dubai Fry guys, right? They just took out a huge long position right here when this broke through. Now, what's the problem? Well, they just got completely wiped out of any options or anything else. They literally just got completely erased. Okay, just because it broke through one line here, one trend line, they've gone completely long in the whole situation. They put millions of dollars into it. They leveraged themselves out completely on margin in terms of their options. They just got erased. Okay, so in terms of the fundamentals of technical analysis, understand that, I really appreciate all of your what would you say, just market decorum, your behavior, et cetera. It's very nice to continually be reminded of how great a group you guys are, and I mean that from the subscribers to the VIPs, et cetera. We've got a few multiple tapes, so we have a host of information out there tonight. So it's a pleasure to have you guys here. Some other people may be watching some different videos or doing some different things in the back room, in the day trading room, et cetera. So it's nice to have you. We can discuss a little bit about divergences tonight. We can go over that to kind of discuss divergences. We can talk about price action. A lot of people want to know, how can I continually find something that's going to go up, say 100 or 200% within the next 3 or 4 days? We can talk about that, a little bit of strategy as well. And maybe we can talk a little bit about if you guys want to light up the, hit me a like button. Let me know that you guys are part of our crew. I'd appreciate that. Definitely appreciate knowing that you guys are part of our team. We do have a VIP level, and you guys know that. I assume you guys know that, but sometimes we get some stragglers in here. So we want to talk about this continuation pattern is going to, by the textbook guys, the probabilities is going to continue to the downside, okay? This is the Bitcoin. Now, this is the market leader. Why do we talk about it? It's the market leader. That's it. Ethereum also agreed, market leader, okay? The ETH-BTC pair is very interesting. If you guys are looking at anything to look at, you want to have an argument about what's the real market leader, have you guys looked at the price action for the ETH-BTC pair? It is impressive, guys. It's real impressive. Let's take a real quick gander at that. Just look at this. In terms of overall retracement, it's been very strong. It's been, if you guys see the ETH BTC pair, showing a lot of strength of ETH vis-a-vis or in comparison to Bitcoin. It's just a really nice chart right now. It's doing what everything else wants to do. It's just in relation, that's Ethereum in relation to the price. Essentially, it's the trade out value of ETH to BTC. It's just really nice, guys. That's a nice chart. If we were to really take a look at this, it's retraced a total of 30%, only 30%, guys. Then it's back up to where it's down 20% from its high. I mean, people did that in their alts and Bitcoin within 2 days, 10 days, something like that. This has been on the map now, the ETH BTC pair, and just kind of flag it for yourselves. Take a look at it, guys. It's been within the last 50 days. It has only lost 20% of its value. That's not bad. And it's had some fluctuation below. It has shown some strength since then. So since the all-time high of the pairing, it's impressive. I wanted to bring that to your attention because it's just, it does. It trades like any other coin. It's something you can trade, the ETH BTC pair, and it's just look at that chart. As you look at that chart, that's night and day different than anything else you're going to see right now. A few other coins, I'll say that. A few other coins are looking about that strong. We can bring up, for instance, and just for purposes of what would we say, not just variety, but I'd say for completeness. Excuse me, not completeness. Let's take a look at ADA. I think ADA is a good one as well to show some relative strength in the market, but you'll see how even it kind of seems like it pales in comparison to how strong that ETH BTC pair is, right? Yeah, it really does. It's down currently now. ADA is currently down now about 40%, okay? So there's some positives and negatives to something that's performing very well. You guys know that. The positives is something that has dropped already as you have a lower price to deal with. Now, how is that a benefit? Well, it's a benefit to the extent that you're able to capitalize on an equivalent move at a lower price. I bring this up a lot, but if let's say ADA were to move this amount here, okay, just this standardized amount, whatever that would be, just kind of a measured move. If it were to move that amount towards the top region, if it had it had an indication that it had moved about this much 2 or 3 times, and we can drive this around about 2 or 3 times, maybe ADA has moved about that much, right? It's done it at the lower levels, and it's done it kind of at the top levels, okay? Let's say that's a threshold limit that we've established, okay? This is a benefit of having something at a lower level. ADA has maybe, let's say, expressed that it has the ability to move this much at the lower and the higher levels, right? Okay, well, we're going to take a look at this at the lower level. That would be about potentially 863%. That would be at the lower level, at that specified lower level. At the higher level, it'd be about, I'm sorry, no, there we go, 72%, right? So over 800% and then 70%. Okay, yeah, that's a shocker, right? The math just tells us that at the lower levels, right, at the lower levels, we're going to have a higher percentage gain. And I say sometimes if we can get there, and I don't mean that all the time bad. A lot of you are staking. A lot of you have a long-term interest in high prices, guys. There's nothing wrong with that. With appreciating the value of your account, like I love that. That's phenomenal. Once the retracement has begun, right, it's a constant fight in terms of like where do we go, where's the price action, what's performing the best. Like this channel has answers. I'll tell you that. Strategy is a big part of the answer as well, because you don't have to. At the top of any coin, we have not told anyone, well, why don't we just hold? That's just not the vocabulary. So real big on achieving a breakout of confirmation and a move thereafter. ADA moved and it broke through its this resistance line. I was discussing this with Jose, who is a new VIP. And he's brand new, but he's been listening to the channel for a while. He's like, well, I picked up a little bit on the breakout. He says, I'll pick up more on the confirmation and the move to the upside. I thought, well, that is just so nice to have him as a member of the VIP, because clearly he's going to beat the odds. Clearly he's doing things the right way. And what happened? Well, it just busted right back through, guys. So that was unfortunate to see, but he's out of the trade in the clear, and it wasn't a big, sometimes people wait until the confirmation to add any. Okay, you can scale in beforehand. That's actually that's kind of textbook and a textbook approach. It's not my financial advice at all, but that's kind of a textbook approach. ADA currently at about $1.43. Excuse me. I don't mind that price for ADA. I think it's nice. We had a lot of fun trading ADA towards the top at about $2.50, ballpark around $2.50. I remember when ADA was about $1.12, under $1, right? And a lot lower than that, guys. So it's nice to have ADA still performing relatively well, we'd say. I think that's good. So let's take a look at some other things that have performed well. We can look at Doge. I want to talk about Doge just because it has an incredible chart formation right now. I think it's worth looking at. We have traded the heck out of Doge. We have had a lot of fun with Doge throughout the weeks here, and it's been a 100x. So we're never going to back off the fact it's been a great investment. Anyone who says it hasn't is probably maybe they just don't like the environment or the culture, etc. So what we're going to be looking at here with Doge is we're going to have to look at 2 different time frames, or maybe 3 or 4 different time frames, to assess whether or not we are stuck in a descending triangle. To the extent that Doge is currently stuck in a descending triangle, this is the danger zone. Okay, so individuals who own Doge, you don't want to. Hey, Longo, happy 4th of July. What's up, brother? Nice to have you. Nice to have you. As we look at this on Doge, guys, very few people are as big of a fan of Doge as I am, and I know there are some. Actually, I shouldn't say there's a lot of fans. But in terms of the price action, when it gets going and cranking, it's a lot of fun. People making a lot of money. That's the truth. So in terms of the descending triangle, you're looking at this line of resistance, which is descending, right, and the line of support here, which is just flattened. So that is essentially on the 2-hour, guys. There's no escaping that. There's no getting around the fact that we're stuck in a descending triangle. That has some big implications. You guys know that, right? We stick. We're a by the book kind of group, and that's like a sore thumb. That's not something we want to see or deal with. This descending triangle. Nonetheless, we're going to deal with it, and we're going to manage things appropriately in terms of, like I am, at least in terms of like any ownership interest I have in these coins. Like that's potentially a bearish deal. I have as my screensaver background. You guys will like this. Just a recent shot of Doge and around this area. It was just a nice shot, 22, something like that. I think on the way up, once it confirmed it wasn't going to bottom out any further. So that's just, I do like Elon and the crew. You guys know that. I like the investment space. We love crypto because there's so much volatility, right? That's when one I'd say, not disappointment, but I want to make sure it keeps going. It's like, I don't know if there's a way to enforce volatility in the market, but if there is, that would be our MO. That's what we want to do, right? We want to reinforce the principles of volatility. We want to find that price action. If you show us price action, I guarantee you our VIP will be there. Guarantee you. You won't have to be a question. We'll have just people stacked literally, out the door trading. I just know we will. You guys love that. I love that you guys are able to handle that. It's really nice. It's a nice professional environment, and you guys are just rocking it. A lot of you guys are doing really well, and it's just fun to watch you. I know you had a big weekend. Hopefully everyone's safe and having a good time. We appreciate all the people who are contributing to the I'd say the mainstays of freedom. We have such a great country. How cool! And our overseas partners. What's up? You ought to come visit us sometime. we'd love to go visit you too. So yeah, that's a special day for the United States called 4th of July. That's just it. It's Independence Day. So we celebrate freedom, and that's a good thing. So looking at the descending triangle, we're going to expect a breakdown, guys. That's just that's the bottom line. We can differentiate it if possible, going to a different. This is Dogecoin. Just for a moment to go through here, but. Yeah, it's just it's not looking real good, guys. At the 1 hour, it confirms up with the 2 hour. We're going to go to the 4 hour. Okay, on the 4 hour, that's confirming up with the 1 hour and the 2 hour. So we've gotten, we have our hands full already. Is there any way we can differentiate this? Let's go to the daily. Maybe on the daily, if we're still there on the daily, yeah, we got some big problems, guys. So in terms of that, this is a big warning signal. Has a little bit of a slant to it. I'll say it does have a little bit of a slant to it. That may help a touch. Okay, good. That may help a touch. It's just the drastic nature of this angle is going to kind of outweigh that. I'm just going to say, on the whole, likely in the technicals, unless it wants to really beat the odds and try and form a bull pennant and really go somewhere exciting, it can do that. And Dogecoin has beat the odds before. So this is just a brief update on Doge. Wanted you guys to know that because it's just if you're looking at the price of something dropping significantly, if we're going through some market pressure to the downside, and it could be significant, and you have monetary interest in something. I just want to make sure that you hear the technical, like the textbook approach to things, and that you're not caught by surprise. The people who hear it and don't do anything, those are the ones that I'm surprised by. I'm like, well, I don't know, maybe they just want to hang out or they don't believe something. I'm like, well, no, this is information that Wall Street's going to look at, that you guys I know are looking at. Like, you guys have the books, you have the materials, so in terms of resourcing, we don't need to prove up and write a doctorate thesis on the fact that the descending triangle, it's a pretty big problem, right? So we do know that it's confirmable even on the daily. So I would say that that's potentially problematic. Let's take a look at the RSI, see if there's any kind of hope there for us on the RSI. It looks like we have a hidden potential bearish on the MACD. Nope, nothing really there to really help us, other than the fact that we just went really deeply into the RSI under 30 on the weekly, or on the daily. I'm sorry, on the daily. We can go to the weekly. I'm not sure that it's a little bit. It's kind of getting a little bit out there, and if we're going to the weekly, just to kind of look at things, just to really pull back and get rid of all the formations, just to kind of remind ourselves where we've been and how high we still are. We just had a great run up overall. So the Doge chart, we're looking forward to. Let me clean it up a little bit. We'll get ready to maybe trade it. If it starts to go any lower, I'll just tell you, it gets exciting because people like to pick it up. They like. Doge has a good habit of going like a 10x. It's done it multiple times this year. So yeah, we don't have a problem. We'll lay into it at a lower price. If you want anyone to trade at a lower price, that would be us. So we look forward to doing that. Or at the current price. If it's price, if there is price action, if there's price action, we'll trade it. You guys know us. So let's talk about Bitcoin. That was a heck of a spill out, huh? Wasn't that a spill out? That was just a fake out and a half. As you guys saw that price action earlier today, and then it just disappeared. And we weren't surprised. I was talking with Jose, and he was looking at getting in Cardano again. I was like, okay, great. He's picking up some Cardano. I sent him a chart, and he's like, yeah, I'm going to play the breakout. And he says, he's just brand new as of last week, and he says, yeah, but I'm not until reconfirmation, not until I get a confirmation, am I going to really, put some serious cash or any kind of real cash into it, even like kind of pepper in. I was like, wow, it's a reason he's in VIP. So welcome, Jose. Double shout out to you. That's really fantastic. And shout out to Angel on the top right. I want to give him a shout out. Definitely a great supporter of the community, of you guys. He facilitates a lot of things, and we just want to thank him for his support of you and the channel and everything else. Just letting us know that he's doing well, and that's important to us. You guys know that. It's important to everyone that we know who the superstars are, right? If you guys can smash that like button, if you haven't been here since the beginning, that'll help me know what I need to cover in terms of financials. We can cover trading lanes, we can cover divergences, we can cover golden pocket targets, we can cover all kinds of things. Just let me know. Smash that like button. Let me know that you've just showed up. That would be nice. It'd be very appreciated by me. So as we look at kind of this, we can go over the best bet right now for the market. I think we should get into Ethereum as well after we get into Bitcoin, just to talk about all the different players. Guys, I'm not a fan of all the different coins. I'll tell you, it's like I don't get emotional about it. I don't look at it like, well, I just, I don't like that. I don't like this. If it's a market leader, if there's a large segment of the population that's invested in it and believes in the technology, it's a major part of the crypto space, I'm going to look at it, whether or not I like it, whether or not I feel good about it, whether or not I really feel, no. The one thing that would be indicated to me if I knew as a matter of fact it didn't have any price action. right? And that to me says I can make money off of it. My friends, members of the channel can make money off of it or not. I'm not. That's where I get a little, kind of emotional. It's like I'm not going to focus on something that doesn't have any price action. Like I would be maybe invested in an annuity, right, instead of crypto. So we have that unique facet of crypto, and we appreciate that. So as we look at BTC, let's just do a little bit of rewind. Let's go ahead and zoom out a little bit. We've been in this sideways consolidation pattern for about 45 days. I think we're working on 46 days now. So I'd come up with the golden pocket figure up above, and it was real weird. I had just kind of let everyone know that. I put out a video that, by the way, and I did this, guys. You guys check this out. Just listen real closely to this. I know all of you here, just listen to this. I sent out the video this evening. This was just not funny, huh? You guys know this? Did you pay attention? I sent out the video this evening in a real kind of upbeat, positive framework video, and I talked about, I have determined, I have done the calculations that we have, and we're essentially going to run into the golden pocket here. And I talked about the fact not only is that a key level to that we're gravitating towards and heading towards, but also it's going to potentially, I believe, act as a resistance. Okay, I said that. I put that in video, and I believe that. I calculated this up very, very, very scientific. Very specifically. I'll say that very specifically and very, precisely calculating this, and literally just, released the video. And I think some people were just like, within the crowd, et cetera, that may have involved, just like, that's it. If this is going to be the threshold, et cetera. And there's I want to talk about the first mover advantage. We can talk about, excuse me, where this is going, et cetera. When you know where a price is going, typically you're going to have, in any kind of a market, a competitive market, you're going to get into something known as the first mover advantage. You guys know about that, right? The first person to open up a business, the first person who built on maybe a street gets their preference, let's say, of where they want their house, right? The first person who gets into, onto the airplane gets the seat of their choice, right? In a business context, we changed it around a little bit, but that's essentially the idea is kind of a first mover advantage. As you look at like solid technicals, typically you'll run into kind of a first mover advantage, and you can kind of have an extended first mover advantage as well. If we look at the 65th percentile here up at top, the extensions, we can go through exactly how to draw those. I went over that quickly in the video, but they're really, really highly calculated, guys, in terms of the precision. It's just a laser guided missile, just perfectly spot on, guys. You don't have to worry about them. If you draw them correctly, you don't have to worry about whether or not they're correct. They're just going to be correct. That first mover advantage is going to come into play when people can determine that, if our price target is going to be let's get back to the why don't we go to the aggregate real quickly? Let's go to the aggregate and talk about, let's say, for instance, if the price real target would have been, let's say, let's go to the candles and see about where it got to 64.86310, I believe it was. I have that in my mind for a good reason, 64.86310. So that figure exactly. You may have known behind the scenes, or someone may have had a real indication that 65,000 was the critical level. 65,000 was the absolute maximum for whatever reason. Let's just say whatever reason, the calculative kind of, let's say, threshold or limitation that was going to be reached. Let's just say that, okay? It was 65,000. Now, let's say it got to 64,863.10, okay? $64,863.10, right? That reflects reality, okay? So, depending upon, maybe you find a different exchange where it was more or less, something like that. But overall, that's about, I think, the agreed upon level, 64,863.10. Now, what you'll find is that from that level of 65,000, if we just go into the coordinates and we just type in 65,000, let's go ahead and just look at that, okay? We have 65,000. We're going to run into an issue where people are going to want to move before. They're going to want to create a kind of the moving advantage, the first mover advantage there becomes a guarantee that they're able to liquidate their position for profit. Okay, so anytime you come up with a price target, and I want to really instill this within you guys, anytime you come up with a price target, the more diffuse or the more, let's say, depending upon the crowd, et cetera, and that can have a snowball effect as well. But when you come up with a price target that is published, typically you can have some action beforehand, just kind of I don't want to say anything other than I want to use that first mover advantage, because anytime, let's say even if you're building up to that, and that we're known that, well, we're building up to 65,000. We're at 64. The closer you get to that, the more incentive you have to really, really start becoming competitive in terms of trying to find that advantage, potentially even elsewhere, but definitely in terms of capitalizing your profit and assuring your profit on this specific situation. It becomes competitive to take profit. So that's a real market phenomenon, and there's nothing manipulative whatsoever about it. If the calculatives are the calculatives, guys, that's just those are the calculatives. We're not going to adjust the math. I'm not going to do that. If the math is incorrect or it's based on an incorrect assumption, hey, then that's, it's we got something wrong on our calculus test, on our advanced linear calculus test. Well, okay, we're at the doctorate level in terms of our understanding of calculus and everything else, but we got one problem wrong. That's inevitable at some point. We try and focus and be highly, highly accurate, more accurate than any other channel. Within that discussion, though, within the entirety of the discussion, we when accuracy comes into play, I take into account, and I know you guys do as well. Even if just consider this, guys, in terms of the market theory. If we're in some sort of a bargain for exchange situation, you're in some sort of a marketplace, right? We have competitive bids. Let's say for this is a very common deal. We have competitive bids for let's say some piece of fine art. Right, we're going to go after some piece of fine art. If you guys read the technical analysis book, you'll notice there's a lot of nice examples, a lot of auction and market theory, etc. I think you guys definitely will appreciate a lot of the examples in there. This is the type of example they may bring up for like market activity, etc. You may have, imagine a kind of a silent auction or something like that with a nice piece of art, or otherwise with access to the individual competitive process with a special relationship or access to the seller, right? To the seller or the holder who's going to sell. We would say, there might be information that such and such we're going to sell at a certain price. Let's say the seller. Why don't we say the seller was going to sell at a certain price? The seller is going to sell at a certain price. He's willing to sell at a lower price than, let's say, the individuals in the market are willing to pay. Well, that information about the seller would become very, 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 very interesting, right? It would adjust the behavior of the participants in the market, right? So you understand the example. We can also flip that to maybe an kind of insider information. You get into a circumstance like that where someone might have unique access to some information to potentially gain an advantage, something like that. And there are some other manifestations of kind of you get into market theory. You get into a kind of a balanced and an unbalanced sense of the market as well. As you read through your materials, you'll get into some really nice structured framework that you'll start to be able to recognize, like, okay, we need a balanced market. Yeah, we need a balanced market. And there are time periods or time frames where the market is imbalanced. You'll notice that when you trade. I wanted to discuss that with you guys, because you will notice that when you trade, when you bring up your trading platform, you'll notice when the prices seem like they're just kind of out. You'll notice when it out of line. You'll notice when it's more difficult to achieve your gains. You'll have days where it's like, man, today I don't know why, it's just nothing wants to complete. I'm hitting my price. I'm buying, I'm selling, I'm hitting my targets. Everything's going. It's like as soon as I get up there, bam, and the market maker, the exchange just takes it out from underneath me. It's like that's happened 4 times today. That's okay. That's a sign of maybe a more aggressive market. Maybe if you're buying or rather than selling, it may be more aggressive against the buyers or the sellers and more in favor or more beneficial towards the sellers or the buyers. So those are dynamics that we always look at, and we try and the more that you trade, you'll pick up on those issues. You will pick up on those issues, and you'll start to be able to apply them to the fact, well, maybe it's because we're in this phase of a retracement. Maybe it's because we're in, let's say, this phase of the run-up of whichever coin you're dealing with, whether it's Bitcoin or whatever coin or whatever stock or whatever dealing with. You'll be able to start to understand, okay, well, we're in a bull mode over here, okay, and I remember doing this, and I remember like the run up was kind of this way on the exchange when I'm buying and selling, when I'm executing my orders, right, when I'm executing my booking my trades, and I remember as this is building up, we've got a lot of positive pressure as well. I remember these going high. Okay, yeah, this gets a little aggressive too. I need to stay a little bit on the action and maybe over. I may feel like I'm overpaying a little bit during this period because it's still kind of a bull on bull kind of a run here up in this area. Yeah, okay, I remember that from last time. I'm going to go ahead and apply it this time. So those dynamics that may apply here early in the Bitcoin kind of, or any kind of run up real bull phase like that, just understand that is those are dynamics you have to put together. Those are things that you have to experience. You have to get through those. You have to get through that activity. When I talk about testing your exchange, I wasn't even really kidding. I understand you guys. You invest, right? You have real holdings. You do real things. Like if you get a new exchange, you get into some different things. Like I'm serious about, rip the exchange up, rip that software up, see what you can do with it. Like see how many trades you can manage at once. Get through and test your test the liquidity in different parts of the market. See where you're going to come across in terms of the spread on in a tight spot. Make sure you have all those things figured out before you start swinging around cash in a market or in an exchange. Okay, that's just my own personal opinion. Like I'm not going to go to I'm not going to go to a Grand Bazaar overseas or something and have a credit card, and I have to get the goods at the bazaar for business or something else. I'm there for business. I'm not going to go there and with a credit card and have to, and before I have to get these goods, I have to do it with a credit card and me get there. There's no ATM. There's no one accepts. I would say I'm in Malaysia, something like that. I don't have a way to functionally hey, Drill Doc, how are you, brother? Happy 4th, brother. Nice to see you. I appreciate you shouting out in the chat. So any kind of limitation like that, well, I can't, I just can't function in the market is what you run into, you guys. And that's a circumstance. I don't want that to happen. I want it very clearly stated by me and guys, anyone else who wants to reinforce this. You guys test your market. You test Gate. You figure out, Gate has been the mainstay for us. It's been phenomenal. I think the link is in the description right now. It is gangbusters. It's as good of an exchange in terms of you guys know that. In terms of the software and the execution, et cetera, you still have to know where you're at in the market. You still have to know what's going on. You have to know the pressures on the buy, the sell side. What's going on? Where are you at? Where's the liquidity freeing up? Is it drying up? Can you look at a screen and can you look at the price? Can you differentiate it with, let's say, the price on TradingView, and can you look at kind of liquidity functions in terms of whether or not you're going to be able to really participate for a profit? What does it take for you to get to that point? Do you have to get caught in a trap 2 or 3 times? Do you have to kind of pepper around? Well, okay, I'm going to take a small amount of money. I'm going to trade this sucker. I'm going to get this together. I tell you, when you do something like that on a new exchange, it may seem like a big waste of time, but it's like, you want to get together. You guys want to get your, I got a new set of golf gloves. Yeah, that's cool. I'm gonna go to the Tiger Woods. New golf course. I'm gonna play with Tiger. Oh yeah, okay. So, but you got his pair of clubs. Well, that's good. That's good. You got the Tiger Woods. 9-iron there. That's great. You're gonna go to his club. You're gonna play with him. Okay, good. Well, you're gonna put some money on it. Okay, good. And I don't mean that in a bad way at all, because you guys are really good, right? You may, there's some people here who might, in terms of golf or et cetera, might be able to go just smack it just like him. I don't know. Some people may be good. Maybe the short game is lacking. I don't know. But typically when we try and go like pro level real quickly and we get excited about something and we want to throw at it like that, these were, the words I just spoke in terms of kind of a rational approach. We get into things and we understand we need to test them, right? We need to get involved in something, and we want to, we want to pull up the exchange, and we want to really, we want to hammer through and figure out what the tolerances are, right? We want to be able to, on the exchange, on the exchange, et cetera, we want to be able to definitely pull up our pricing, enter in. How long does it take to enter into all of your Fibonacci levels? How long does it take to erase all your Fibonacci levels, right? Yeah, absolutely. How long does it take to clear those out? How long does it take to switch between two different screens or two different accounts? How long does it take to, all these issues get cleared up. And I don't want to get them cleared up, or you guys get them cleared up just friend to friend, right? I don't want you to have to clear those up on any exchange you're on, okay? And where you're unable to operate in the market. Right, I wouldn't send you guys out to the Grand Bazaar in Malaysia with a credit card and say, "Hey, have fun, bring us back all the important stuff we need, or all the important stuff you're going to need for the rest of the year." It's your only chance to get there. Like, no. That's why I'm serious about this stuff. And I know it may not go over very, very well, but that's the type of care and concern that I want you guys to understand that we have for you. I want things to go over well. Good day to you, Dan Dro. Nice to see you. And we appreciate you all being here, from Drill Doc to Dan Dro to Longo. We set out a bunch of different tapes, and I don't know, just want to start, peppering in, we pepper in lightly kind of, at the top. I want you guys to know that, in terms of the different videos, et cetera, I just want you guys to have access to something. I know you guys by now. We spend enough time together. It's like it's not a race to the 100,000 subscribers, right? It's not a race to 100,000 subscribers at all. It's just not. You guys know that, right? It's like I'm happy with professional guys. We had a new VIP member the other day. He stepped in. And we had some rules, and I was just like, well, this is the way things are. It kind of has to be like this, And it was so cool. Miles, he was so cool. I was like, it was really nice to have that. He's like, no, I understand. I appreciate what you're building. And he really understood it. And I was like, that's phenomenal. And then, he got in. I was like, just have some patience here for a second, because he got in, and Jay and Chris were talking. I'm like, we have one investment banker, one, exchange employee, crypto exchange employee. Is like, they're discussing things right now in the chat. So just kind of, chill out and maybe, we'll work into the conversation and just kind of learn something, So we were talking about the 2008 market crash and what they were doing, what I was doing financially, et cetera. Then, so we did, and it could be, blue collar workers are talking about, tire irons, or it could be, running pipe or something on pipe fitting. It could be anything. The importance is, and I say this, that could be the other people who are we're not exclusive to that extent. Like, we like hard work. We want people who want to beat the market, right? But we do have professional decorum like that, and we try and get a little wild and crazy. It doesn't work, right? We try to. I don't think we're very good at it. We're better at the market. We're better at reinstilling the same principles, and that's why we get together a lot, guys. You know that. That's why we spend a lot of time together. And we do try and have some fun, but we try and stay plugged in and focused to the principles of technical analysis. Absolutely. It's not gonna hurt you. To be reminded either of y'all's strategy that I hear is like not being overexposed at the top levels, because that's gotten a lot of you here. Like, period. The fact that you're still here and doing well, and you're in a good group that's achieving and that has achieved. Yeah, like you're looking at like Andrew on the bottom right. He's a key leader at 500. You're looking at like Angel on the top right at 4,400. Just, guys, they understand, like, you have to sell to make a profit. Like, Angel was in Matic, and he was listening to the program, and he decided, yeah, that's it. I'm going to sell. And so to be reminded of these things is just, the impulse. The impulse is to sometimes act, against market standard market behavior, right? And we always benefit, I think, by reinforcing amidst ourselves, in our group, et cetera. In fact, we do well when the market goes down. Right? That doesn't faze us at all. Like these things that we know, but to reinforce them and to hear them and to have them discussed in a unique manner like this, in a professional regard, we don't find that, right? It's difficult to I can't quite put a finger on it, but like no one else is talking about that, and no one else has talked about that, right? So we appreciate that very much from all of you. Is the notion that we can reinforce those market principles and those key behavior characteristics that allow us to thrive in the market, period. And we kill it like nobody else, guys. We just do. I know this group, and you guys are just phenomenal. You're very good. I'm continually impressed also by the increased caliber of new VIPs we're getting. People, and I'll just tell you, it's a different kind of caliber. Some of them are highly technical. Some of them already know, for instance, what a bear flag is, okay? They're going to know, like, right off the bat what a bear flag is. The other ones may have listened for a while. It's very interesting to me. They may have listened for a while, and they have gotten into, let's say, some of the old Harmony One videos or something like that we used to do. And I'll tell you, they know some things you wouldn't believe in terms of strategy and technicals, et cetera. They have done a phenomenal job. Like Jose today, talking about like on the Cardano breakout. I'll show this again to you. It's just huge benefit, to the community that you guys know within the VIP, et cetera, and anyone who can hear this is just a phenomenal story. Jose looking at and I'll bring him up here in a second, but just so you guys know, where is Cardano? Where's ADA? Where is it? Come here. Where is ADA? Come on, there it is. Okay. Now ADA, you guys know, just essentially ran through a line of resistance. Let me go to the hourly. I think that's going to pull it up better. Yeah, on the hourly, it broke out through a triangulation here, and I was chatting with him in the back DM exclusive chats, and he's chatting me, and he says, well, we've broken out, and he's talking about, I really need to achieve confirmation and move to the upside before I really throw some serious cash into it. I'm like, brother, you were in the right place. And it's just funny because he hasn't, and I didn't know he's been listening for a long time, but he didn't pull the trigger and become VIP. And so finally, he's VIP. Excuse me, he's not really, I won't say he's like severely concerned with all the TA. He's not really versed in all of the technical trading kind of lingo, etc. But he understands the basic principles like that. And when I hear somebody like that who's just joined the group, I'm like, God, you got to be kidding. No one has that mindset. Like very few people. When we talk about the 95% of the people that lose in the market, we've got the 5% guys. It's really nice to see that. And we probably have the 1% from the 5%, to tell you the truth. So that's really nice, and shout out to him. I love a success story like that because it belongs to all you guys, honestly. You guys have helped build an awesome community, and I know you guys are spending time with your family today, and that's exciting. We got freedom here is being celebrated, and it's in the United States. So that's a good thing that we're able to have a talk show, that we're able to invest in crypto, that we're able to disagree and have differences of opinion. So that's a nice thing. So we appreciate that notion today. So I did bring up the fact, and I guess we can look at this today. I want to talk about let's talk about this golden pocket on Bitcoin. I want to make sure these figures are correct in between the daily and in between let's get here, in between the daily and let me go to the candlesticks real quickly. Yeah, we'll get to the candlesticks, and I want to look at, where are they? There we go, right here. Come here. There you go. The candlesticks are going to provide us with, and that got really close, didn't it? That was super close. As we look at the candlesticks, we just, I did a calculation, et cetera, just to talk about what we would be looking at in terms of, kind of the key resistance level of the golden pocket. You guys know things they like to go to the golden pocket. It can act as kind of an attractive force, right? We would want to accomplish that. We want to get to this level of extension, clearly. We want to get there, but what's the problem? Well, that's also, sometimes things will hover around. I'll bring this up to you now that you guys are listening. Sometimes things will kind of pass through, and you'll see them, and they'll want to dance along the top and act like maybe they'll go somewhere else, and then they'll kind of settle down on top of it. They'll kind of use it as a breakthrough, and the resistance will kind of turn into a support. You guys have seen that before? I don't know if you have. It happens. If you achieve a level, a lot of times the price will break through, and then it will kind of maybe bounce a bit, and it'll kind of just hug along this line until it decides, well, a little more action, and it likes to use these levels wherever it does decide to go, and it may have decided to go only to the 50th percentile. It breached that. Let's see, it breached that on today, did it not? Yeah, it did today. We're going to look at this in a little bit more depth today. Let's get down to the actual nitty gritty and figure out exactly what went down, because it's a historic deal that it almost came into contact with its golden pocket. That's a big deal. Let's look at what time was that? Let's see here at 1600, at 1500. Okay, at 1600. CST, that's a Chicago time. Guys, I also found out that Gate is headquartered in Chicago. I thought that was great news. It's a domestic company. Gate is headquartered out of Chicago. I thought that was great news. I wanted to let you guys know that. I think CBME, Mercantile Exchange, some other big finance issues are out of Chicago. You guys can enjoy that fact. I was wondering, why is this company so good, right? Why is it so nice? That's looking like a nice little interesting green Doge. You guys see that? You guys paying attention to that? That's interesting, huh? On the hourly, that looks like a nice little green Doge. I don't know if you guys are into candlesticks at all. I try not to be, because not everyone is, and it gets kind of annoying for anyone who isn't really involved in them. I'll tell you that much. But that might be consistent with that. We'd have to look at where that is. But this pour out was a big deal. The potential price target on this was in and around in that first mover advantage we talked about. Essentially, you know the price, you know where it's going. As it becomes kind of known, maybe everybody says, well, we all know where it's going. Well, he's going to sell before me. I may not even get out, right? So, yeah, the target expands to fit the number of participants allotted. Like, essentially, sometimes you guys know that. And still within a specified degree of reason, but it looks like within that golden pocket extension, it looks like it came up within a threshold, a measurable threshold. We can go ahead and look at it within let's just say within about 0.8%, right? Within about 0.8%, and I want to say within about 5946 up to 6246, about $300, right at $300 off on the aggregate total of the price of Bitcoin. You got within $300 of your golden pocket. So that's a big deal there. And so we would, what would we do immediately when this starts to retrace, guys? What would we do? First of all, we're not a part of it, right? Okay, you guys know that we're gonna trade. We're gonna book our trades. But what's the main issue? Well, it broke out of a triangulation. It didn't reconfirm. It did not, guys. It didn't reconfirm. It looked fun. Anytime the market maker's showing you that nice price, you're gonna learn the easy way or the hard way. The easy way is just to listen and know what he does, right, and to understand what he does. Our market maker's he's got a price. He's sitting there doing this. Well, he decides to go up the next level. All right, he's doing that. Well, he decides he's showing you he's got price action. This is what he's doing. Well, he's going to drop it back down a little bit. All he's doing is advertising for you to get involved, guys. That is all he's doing at a very dangerous level. Whenever he sits there and he's just doing this and doing this and doing this, guys, you enter at, I know you guys, so I don't have to worry about it, but you guys enter at pricing targets. You guys have like scheduled Fibonacci's. If you're breaking out of something, you want to break out and a confirmation for this. Look at this. You guys know that, and you can learn the hard way, but these are dollars, right? It has to, these are real returns that you guys are looking at accumulating, and this is a real dangerous problem here. This is a real failure of anyone who decided to enter in on this and did not stick to the common principles and the rules. And this should be very reinforcing for you guys as a group, absolutely, that you need the breakout and the confirmation, right, where the previous resistance turns into the support, and then wham, you move to the upside with some momentum. If you schedule things up like that, you're going to have a much higher, probability of success, guys. You're going to have much better returns. It may be frustrating because, well, we don't get as many trades in, and oh, really? Well, that's okay. Can you get one in a day? If you got the right kind of move, you might only need one a week. Would there be a difference to you of saying, well, I need to stay busy in the market. I need to, or I just need to feel busy. I need to be moving my money for some reason, right? I need to be trading for some reason. Well, okay, you need to be trading for some reason. Like, what's going on? You can't just, could you limit it to one pattern breakout a week? Could you? Because if you couldn't, I would want to know why. If you couldn't, would it be challenging to what extent? If you really refined everything, you're like, well, I need to make more money than that potentially. Okay, more money, potentially playing more of these the incorrect way. Could you, or more of these, let's say this, the incorrect way also, if we look at the actual pattern, okay, and the conformance with like the real fundamentals of technical analysis, like real solid, really solidly formed, something that you could put in a textbook. You could write a thesis on it if you wanted to. Waiting for that one pattern that's just like, no, this is the one this is one for one this week. I'll do another one next week. Let's see how this works out. Can you imagine having that level of discipline? That's a level of discipline that would probably achieve results, I would imagine, if you're literally looking at all the pattern breakouts. Or in addition to you could get into that as well, huh? The next level would be, not only are you going to look at kind of the cart guy before the horse, you would say, I would want to look at the chart, the actual chart patterns. Then it would be, well, now I want to really look into the pattern breakouts, right? I want to look at the breakout and the confirmation. Now you get into that afterwards, like, well, this week I didn't hit one. Well, we just, there were two options, and each of them had an incorrect level of breakout and confirmation. That kind of person is not in any hurry to make any money. That person doesn't need to make money, and that's the kind of person that'll probably make money. The people who feel like they need to make money, the people who, and I just bring this up because day trading, you guys, you're good enough. You can do what obviously, you're going to do more than one a week. But the example is huge. People who show up feeling like they need to, like they have to, they need to make money in the market, they're going to rush. They're going to rush and push through on chart formations they never should be trading, right? They're going to rush and they're going to go ahead and deploy their capital like this without a confirmation, and wham. Well, now they need to make money. Right? Yeah. Now they've broken their, kind of their golden rules, and now they need to make money. Now they're going to show up tomorrow and really need to make money. Right? That's not what we want to go through. That's not what we want to engender. We're not about loss, guys. Whatever kind of rules we talk about, I'm just, I'm a by the book kind of guy. right? And it's funny because I'm literally normally like, why don't you actually go buy the book, right? And I can tell you which book all is in charge of all this stuff. There are a few. The primary one that we use, John J. Murphy, you guys know that, Principles of Technical Analysis. And it's nicely put together, and it's kind of the book on Wall Street. So that's just the truth. That's what we look at. So I'm going to pull up a few different things. Look like we have a pivot call here, looking at some different, some divergences. I want to talk about a few divergence characteristics later on. We may get into that. I want to talk about whether or not we've hit any little bearish on the MACD. Divergence up top, that was interesting. Okay, we got close within $300 to that golden pocket. That's okay. And we didn't get there. That's okay too. Again, once everyone's going to sell it at $100,000. Oh, okay. What's going to happen? It's probably not going to get to $100,000. Well, okay, if it's going to get there, we need to sell out before. Make sure we make sure we get our profit, right? So that dynamic may have been in play. It's close enough with $300. I'll just say it may have been in play. It looks like we're heading down. If we do some diagnostics, if we do some comparatives, I think it'd be helpful right now. Let's go ahead and take a look at. I want to look at the structuring here, okay? And I want to look at the fact that is this run over? Because could we still hit up towards that amount? I think we could. Will we? Well, we'll talk about it. We'll talk about that magic answer, like what's exactly going to happen. It's the market, guys. You know that the guys that do the best are the guys prepared for both sides. Especially if you knew. Oh gosh, if you knew for an absolute fact, especially then, I wouldn't want. I wouldn't want you to tell anybody. I'll tell you that. I'll just tell you, if you knew for an absolute fact, I'm not sure I'd want you to tell anybody, because then that person who knows for an absolute fact is going to go out and leverage everything they have, guys. You understand? And the off chance that the absolute certainty that you knew about is a one in 1,000 possibility that something could go wrong. 1 in 1,000, right? 1 in 10,000 possibility something could go wrong, right? But it's certain this is going to happen, because you hear people that just maybe we waffle, or maybe we talk, or you guys, you don't know for sure. You want people to really have a distinguished conversation about the probabilities, etc. Because that 1 in 1,000 or 1 in 10,000 chance is not worth the entirety of what you would risk if you really believed and knew you had the sure deal. Now, we work on the probabilities. That's why we focus on the fundamentals of technical analysis. How do the technicals, technically, that's all we have to work with here, technicalities of the price, et cetera. We have some, what's our BTC? What do we got? Okay. All right. As we look at the technicalities, it's just, it speaks form. All right. You guys paying attention to form? I like form right now because the RSI is looking decent. You can quote me on that. It's fine. Nothing. Great time for form to pop up, huh? But form is establishing a very interesting chart formation right now. It's also wanting to potentially kind of pour down a little bit from that. So I would keep an eye on that. I would just take a real hard look at the RSI on the hourly, and I would see how far down it has gone in the past, because it's been down, and I have an alert set for that. But it's been down to, good gosh, it's been down, I want to say, to 14 to 15. So you've got a ways to go, guys. You've got a ways to go on it. But also, you've been kicking up at a lot more than that. So as soon as you find a pivot here, you may be off to the races again. Form has been a real big moneymaker. And, I brought that to everyone's attention. And, you guys know that. But, a nice 2X, a lot of people are trading that too. I know that Lars is trading that. She's having a good time. It's had some good price action. Anytime you see the price move, like, I just need to see the price move. You guys know that? Like, my deal, like, show me a price that moves, right? Give me some price action. Like, show me the price moving so I can trade back and forth. Something that just sits there all day. It's like, well, we can't trade that. So I have alerts set up on form right now just to stay, kind of ahead of the game with where things are at and where they've been. I like what it's forming right now. I like the chart formation. Don't you think? That's an interestingly well designed kind of what do you guys say, huh? You guys, I think that's kind of nice, isn't it? I mean, that's not bad. So as we look at this, it's in terms of it's. I'm not going to say it's bullish or not. I don't want you guys know the story from the back end, et cetera. Like you've been looking at Forum. You don't need me to discuss. We got a. We're working on the bull pennant. We're not. You guys have. Some of you have some heavy cash. You want to throw it around. Like, hey. Just pepper in lightly at the top is what you tell me, right? So you guys do that. You want to buy a signal right now, and you got to throw a couple $100,000 into it. Yeah, come on, huh? That's not cool. Come on, you guys do your own. Come on, huh? I know some of you guys right now. I know some of you guys right now on Forum or something else. You're ready because you've seen some big things. You're like, I'm gonna watch this. I'm gonna figure out. We're gonna put a couple $100,000, or we're gonna put some money into something, right? That's okay. We can have those discussions. I'd be happy to give you some non-financial advice anytime you'd like to, just based upon the fundamentals and technical analysis. Of course, right? Of course. You're all probably laughing right now. So, yeah, we have, Anyway, so Forum was good. That's another 2x from pricing target, etc. So that was nice. We've had probably hats off a little bit. We've had at least 5 2x potentials that you guys could have traded and made 2x on. Some of them were no-brainers. Some of them were easy. Some of them were difficult. All of them had price action in excess of 100% that you could have maintained and traded and had fun in the crypto space. That's part of the excitement, right? It's like, well, it's just hype. No, it's exciting because you're involved in a trade that has that much volatility to it, right? And yes, it's nice to make the money. It's nice to make the cash. Absolutely, it's nice to make the cash. You get good at things that are swinging around up and down, let's say 80%. You get good at trading like that, that's a whole different ball game, guys. I mean, you're past the floor on that in terms of the floor, whatever floor you may have worked on in exchange, et cetera. That's some real kind of high level skills. So that's exciting. The more you can train on that, it's going to make the rest of the market look like molasses. You're going to think if you get involved in different things like Forum or different coins like that, you need to understand when you get back involved with something like Bitcoin, or you get back involved with some other, investment instrument, as a stock, if it's a bond, guys, the rest of the market's going to look like it's moving 2 miles an hour. You're just going to, big deal. This is easy, right? So that's the level of experience that those bring to you, right? It's real crucial that you guys understand there's some fallout effects and benefits of being involved in some fast movers. They may move fast to the downside, fast to the upside, right? They may do both. All in the same day, all in the same minute or hour, right? So that's being able to manage that, and at a light level. I enjoy hearing about people doing that at a light level, right? Maybe some different long-term, what would you say, 6 or 7 figure kind of plays you think you might want to do, but that's maybe beyond the scope of what I would ever talk about. So not ever, but for right now. So as we look at this, I will bring up this triangulation right here. This triangulation, okay, it is the best bet that we do have in terms of just getting back to the nuts and bolts here on Bitcoin. Let's talk about it because this is the market mover. We may talk about the other market movers. If you want to talk about Ethereum, that's fine. We can talk about Ethereum a bit. I have changed up this just a little bit to kind of get into the rails along this where this is wanted to kind of engrave itself along some kind of line. I have kind of included this here so that we don't get upset or kind of freak out if and when we start to kind of grill upon along this line. I want to give us a little bit of leeway here, right? If this starts to kind of dig into here, it's kind of nice. Okay, just expect it to kind of dig. Maybe would be a good thing if we can get to that point. Yeah, just maybe expect this to kind of dig into this ascending line, right? Let's give ourselves a little bit of a kind of a comfort, a little bit of comfort right here would be nice. So what we're gonna discuss right now. We had a nice move up, right? We had a level 1 move up, right? We can kind of say right here also, we had kind of a level 1. Let's look at this. Let's look at the preceding interval here, a preceding interval. Let me lower this down a little bit in terms of there we go. Preceding interval, we had a kind of a level 1 move up. Then we had, kind of a peak formation, right? Turned into another higher high peak formation. So here we have a level 1 move up, okay? And then we had a peak formation. So level 1 move up, here, we'll say here. Then we have a peak formation. This is part of the consolidation. So, and then we have peak formation. So we're dropping down here. We also dropped down. I want to give you some perspective. We also did drop down here. I always try and use some sort of correlative analytics to give me some indication of what the possibilities are. Because sometimes it's even hard to think outside the box. You guys know that? Yeah, sometimes you need an example nearby to give yourself some different ideas in terms of what could happen, right? And that's nice. I'm going to bring up a sign line. I do this quite frequently, but I think it's going to be very beneficial right now as you guys analyze where you think things might go. Let me go ahead and bring up a sign line if I can find the exact tool. Come on. You guys ever use the sign line? There we go. The sign line is going to designate a typical channel formation or a kind of a wave format, right? That's what's going to be designated by the sign line. Excuse me. So when we look at the sign line, okay, I want you to flip it a bit and look at what's going on up here. Okay, just look at the general nature of the price action as people are trying to get very, what would you say? We're all very concerned about, buying and selling the whole time. Let's take a little bit of a breather from that approach, and look at just a general nature and a flow of the price action, right? Now, as we look at that general nature and flow of the price action, this becomes important for us to understand that, right? This shows us the nature of the price right now. You see, it's not on the same lateral scale, but it is showing us, and just because we have this on the screen, we're able to understand, just because we have this on the screen, we're able to understand differently the price. You see? Yeah, I think you guys would agree with that. So we would hope that this move somehow in line with, I'm just going to say in line with this, whatever move can be achieved. Now, we just hope that this golden pocket hasn't really served as the end-all, be-all kind of line of resistance, right? Now, it is that point that that the price wants to gravitate towards, right? You know that it wants to achieve that point. The extent to which it, I think if we go on the daily, excuse me, I'm a little congested. We've been going outside quite a bit just due to, you probably have as well due to July 4th. We would expect the price to potentially go there on the daily, on the line, okay? Because these estimates were drawn out by an analysis on the daily chart. So we might expect that this line were to go there. I did express in the video that I did. I've been doing quick 2-minute videos. I know you guys are busy all the time, and a lot of people just kind of stream in or stream out. They'll take a couple minute breather, and then they'll just take off and they stop in here. So I'm trying to get in these small videos I'm trying to get as much information I can. Just crank that to you guys, just so you understand that. Excuse me. I may need to sneeze here. Excuse me, I'm sorry. Everybody's blowing fireworks off outside, so that's a good thing. A lot of you, I guess, are not into fireworks, so that's okay. Or maybe you lit too many already. It's like, the party is over. I don't know, but it's okay. At least we're in the market. I know who's cutting their teeth on party, and the guys who are cutting their teeth on the market. I like the guys on the market right now. It's nice. But hey, there's time for both. You guys do what you need to for both. So on this, it would be interesting to see if we wanted to achieve this golden pocket here. If we can, that'd be great. If we can't, that's also okay. Okay, as I talk about, well, it's definitely going to this level. Well, we can discuss that. We can discuss it's definitely going to that level, or it's definitely not going to that level on the line, right? It could also definitely go up to the 37,765. We can play the probabilities of it. As we look at the entirety of this formation here, it would be it would be dynamic to have some increase in price. We have not experienced, and this has been a little frustrating. Understand that you guys, you've been playing in a real tight market. Okay, look at what's on the screen right now, and just give yourself some credit. All right, you've been doing a great job of staying motivated. You really have, because as we achieve, I'm going to tell you, as we achieve better prices in the market, and listen to me, like if you really can listen right now, okay, as we achieve better prices in the market, what's going to happen is people are going to be pushed out of the market. Okay? They're going to be pushed out of the market. Things won't be as exciting, or things won't be as entertaining, or the price structure won't be quite as great. The movement won't be it's kind of dull. It's kind of, yeah. Just be prepared. As prices get to a level that you would want to put together your 7-figure plan plus 7+ figure plan, right? Like 6 figures is $100,000, 7 figures maybe $1 million. As you would want to really put together those plans, there's just going to be this general, maybe, let's say, potential, right? It'd be great if everything stays exciting for a long time, but I think we're already starting to see a little bit of that because things slow down. So it's already occurring. It's a psychological phenomenon right now, and it's in line with better prices. And there's less volatility, and with less volatility, people are having more difficult time trading or achieving gains. It's becoming less attractive. They want to go somewhere else amidst the time we have lower prices. We're close to maybe even having better prices. Those same people may be, well, I just got tired of it. Things weren't moving enough for me, right? So this may be a natural dynamic of the market. This may be something, and I'll just prepare you that it can get even more, a little bit more tenuous on you if things start to go and even frustrate further. So it's good you guys have, you have a community, we have a good group, etc. We're going to find price action somewhere. I think we found as much of it as anybody else, guys, if not more. We have found a ton of it. I don't know other groups that are finding it like we are, so that's fine. Just to find it, be a part of it is exciting. Anybody, in the group, be a part of it. I'm like, yeah, that's what's going on. Jay, I shout out to Jay. He booked Sol. He booked a Sol trade that I put up in SOL trade in the community a while back. I put it up there. I was like, you guys maybe get 90 or 100%. He booked 50% on it. He told me yesterday, he said, London, I booked 50% on Sol. I was like, yes. Like anytime anybody tells me that stuff, I get really excited. Okay, just because I know you guys you're working on. Getting those hot hands together, so it's a good thing. So as we look at the price action, I give you guys kudos. I give you a hats off here because the price action was pretty dramatic during here. These were nice big moves, and this attracted a lot of people. It attracted a lot of people to Bitcoin, right? It did, because the returns here were almost as great as all your altcoins. Right, it was nice, really nice. I started in the crypto space investing in Bitcoin. Some of you guys invested from the very get-go in Bitcoin, right? So that's a nice thing to see. It has some price action. It kind of reminds you of maybe being around in a different time. It's nice. Things really going in the right direction. Now, as we've come into this more recent pattern, this more recent kind of channel right here, just understand it's kind of frustrating. It's like, things have slowed down a little bit. They sure have. And if they need to slow down, they need to slow down. We're not going to be able to change that. We still have kind of an attack dog mentality. Nothing's going to slow us down, right? So we're going to find a means, a method, some alternative coins. If this is kind of constricting and slowing down, we're going to find something to do, guys. We're going to find something good to do. We're going to, we're going to enjoy ourselves. I guarantee you that, without a doubt. We're going to find those returns. To the extent that those returns lie somewhere below or where we are and they require patience, what's the old saying? Warren Buffett, he says, investing is about is an exchange of, wealth transfer from the impatient to the patient. That's what he says. It's a transfer of wealth from the impatient to the patient. That's it, guys. So as we look at things, we're very capable of having a good time. I'll say that much. So in the meantime, we're going to have a good time. That's all there is to it. This what would I say? Let me see here real quickly. Had to move the mic. We have two different options for kind of getting out of this. I want to talk about the different time frames. First of all, I wanted to talk about that kind of the consolidation here. Things may become a little bit more, more or less attractive than what they are right now. This was more attractive. This was nice. Most of us started looking at Bitcoin again, potentially. I know you guys have looked at it for a long time, but we looked at it because everyone seems like a Johnny-come-lately now, in terms of now they want to cover Bitcoin. It's like, well, it's okay. I think the guys in the room, a lot of them have done this for a while on Bitcoin, but that's okay. We enjoy alts too. Is that the double bottom on the wedge? Yeah, sure is. Good call, Jason. Nice to see you, brother. Happy 4th. We appreciate your service to the country, brother. Thanks for fighting for our freedom. We really appreciate that. Yeah, the double bottom, absolutely. You got that right. You nailed it. And it's different. The double bottom is different. We're still gonna, if we turn on the wicks of the sticks, we're gonna get kind of this slant pattern. Okay, but we do have a real solid look at the And you really couldn't program it up any better. If you're ever looking for the double bottom, I always recommend that you guys look at the candlesticks, because that's just that's not necessarily just that's not normal, right? I mean, you would look at that like, wow, that's fascinating, huh? It is fascinating. That's one bottom, that's two bottoms. It's not slightly, it's not anything else. No, it's just program. You can understand there's a reason why we focus on fundamentals and technical analysis, right? Yeah, when you have results like that, yeah, you're gonna notice them, and you're gonna know that that's a real result here. Those are real technicals that we're looking at here. So that's nice. That's a good call, Jason. I appreciate that very much. So this channel that we're currently in, has an expression on the bodies of the candle to where we're still in conformance with that, even right now. I want to say. The current price, we're the odds of maintaining this channel. If you guys are looking at like a channel trade, you would need to make that determination. We're very close to this line here. I have changed it on a different time frame to give us a little bit of leg room, because the other one of the things I notice here is within the conformance. Excuse me, pardon me. Within the conformance of the let's say within maintaining, as we maintain, that's probably the better way to say it, as we maintain this channel right here. Notice that the bodies of the candles are within the channel, but the wicks aren't necessarily within the channel. Okay, so we don't need to get completely flipped out or completely, we don't want to make any rash decisions, let's say that, if and when we get price action to the downside. Now, we'll know, particularly if there's a close outside, you look at a close outside of the channel. All right, the wicks aren't really going to seal the day. Excuse me, I had to clear my throat. So as we look at this, this is kind of a very pattern diagnostic we would typically do. I think you guys can kind of learn something there. It's important for us to realize that. And you would not take, for instance, Jason, as you look at something, you would not take this necessarily together as like a double top. You could take this one and this one. It's some interesting pattern recognition that's going on by you, and I'd say that's being achieved by the entirety of the pricing here. You'll see this double top, double bottom. Let's say a singular top, but the express equality of the candles that are contiguous here is very interesting, right? That's a real indication that we've achieved, as we look at this, that we've achieved a pivot, right? And so we would want to know right now. That would be something right now that we would want to know if we've achieved. You guys agree? Yeah, interesting. You guys picking up on that? Yeah, it seems like it. Let's take a look at that real quickly. Let's see if we can mess that up at all, okay? Because I don't think we can. Okay, let's take a look in the beginning here. Okay, in the beginning, we came down into the consolidation zone. We have a nice, we have a nice line here. We have a nice, kind of level of congruence here. Absolutely, nice line of congruence, right? Nice. Okay, so we do what? Well, we move up. Right? And we move over. We move up and over, then we have a nice level of congruence here. Then we do what? Well, we move down. Right? We hit that on the top, and then we move down. Well, then we have this on the bottom, and that's nice in addition to the wicks and everything else, but we know, what do we know? Well, we know we're going to move up. All right, that's nice. Now, this is where I guess maybe we mess up. Because here we have it here on the left. We would know, and we always do testing, guys. We always do this testing, that we would move, well, we can't say we'd move down. We actually moved up. So that would be one instance. We found one instance out of 1, 2, 3, potentially 4, reinforced move to the downside, potentially 4, along the way down, right? Maybe kind of a confirmation. There might be things about these candles. I don't get too much into candlesticks, but this is a kind of an introductory, something that we can look at to begin to discuss them. So we'd have a negative implication here, and it looks like it's a price out of, the 1, 2, 3, potentially 4, 3, and the 4. So we have, something out of 5. We have 1 out of the 5 that is telling us the wrong story. Then we have 6. Then we have 7, that's 2 out of 7, the wrong story. We have 8. Right story. Up. We have 9. Okay. We have 10. We have, and this is close, huh? We have 11. We have 12. Equally measured, huh? Yeah, equally measured. 12. Then we have 13. Then we have 14. Then we have 15. You guys paying attention to what we're doing during the consolidation? That's 15. Then we have a big hiccup. 16, which hurt. That hurt. If you're betting up on that. 16. The hammer tells you, but it's okay. 16, I'm not getting all the details. 16, 17, 18, 19, moving up, 20 surprises. 20 surprises, yeah. 21, 22, 23. Okay. Out of the 23, how many did you guys count that we have that have the essentially the equal measurement in terms of contiguous candle bodies at the same height, right? We're going to get into the basic formation of the open and the close of the candles, right? Essentially. We're going to try and predict from that whether or not we're going to be moving up or down here. The next candle, can you tell me whether or not we're moving up or down? We just opened over here. We're moving down, correct? Are we guaranteed at every single level that we express the same open or close at that we're moving in that direction based upon the data? Can you guys make a directional shift every single time based upon the data? Do we have anyone who specializes in candlesticks? Have you read the chapter in your book whatsoever? It's okay if you haven't. In terms of candlesticks, do you know what a Doge is? A Doge is going to look something along the lines of a cross, okay? A Doge is going to be the simplest means and measures that you're going to be able to identify anything that is going to potentially serve as, let's say, a top, for instance. As we start off on, let's say we want to identify a top. We're going to look at a Doge. All right? There's probably anywhere between 100 and 150 real candlestick patterns and combinations that we can get to. Just noticing right off the bat that there may be some sort of a walkthrough process that you can come up with to start to identify something that looks maybe like this in the pattern right here. Did you see that? If indeed you see something like that, that is a signification that you may have run into a top. Okay? So when you go through things, you'll remember on 4th of July that we spent a little bit of time on candlesticks and we never do. But I want you guys to know that if you ever come into contact with something like this, for purposes of candlesticks, that this would be the top. That's very important for you guys to be able to understand that, okay? I'm sorry we took a little bit of time, but I hope you'll always remember that. Copy that. Copy that. Okay. On from candlesticks, and we normally don't do those, but I did want to get into that just a little bit on 4th of July because I feel like that's important, and I appreciate everything, you guys being here, etc. And Jason, we appreciate you, brother. And yeah, as if you were a Japanese candlestick master, we appreciate you so much, brother. we appreciate you bringing that up in terms of the double bottom. Let's get back into the technicals that we're familiar with, but I did want to have that kind of talk that we don't always, just throw out on our YouTube channel. It's just not, I don't know. It's like we don't talk about candlesticks all the time, but I will every now and then. So in terms of the, let's talk about the double bottom that Jason brought up. We'll get back into real kind of aggressive on the technicals right now. Now, we have a difference there's a difference of opinion, Jason. I want you to pay attention and plug in on this, okay? Now, because now we have this expressed, right? We know the candlesticks are something different. When you see the candlesticks, think something different, okay? I'm going to ask you, always go back to your lines until you master candlesticks, all right? Deal. Okay, now in terms of this, we don't have this one pattern I've been talking about, which is an ascending triangle. We don't have that, right? We don't have that on the daily. So the daily is always going to give you essentially a different pattern, different price chart, right? Yeah, absolutely. It's going to give you a different price chart. It's going to essentially accumulate, like there's more right here, as you see the price action, there is more price action right here. It's going to consolidate that with the price action here. So it's going to consolidate a point right here and a point right here. So this consolidation in this area is going to be the same here, and it's computational. But that's the reason why that you have a difference, and we don't have the ascending triangle on the daily. They're both bullish in nature. Both the double bottom is indicative of, and potentially, let's say indicative of, or potentially can serve as a bottom in the market. Pardon me. You guys got that? Both the ascending triangle, which is what we're looking at right now, the ascending triangle, right? That ascending triangle and a double bottom, ascending triangle, right? And a double bottom can both serve as a bottom in the market. They just can, okay? So there really is not an inconsistency between the hourly chart showing us an ascending triangle and the daily chart showing us a double bottom, okay? We still know on the other time frame we have the ascending triangle. Truth, okay? They're both bullish. They're both potentially bullish. We already know we went through a double bottom here that didn't hold right when we hit. So in terms of that, we've already been through one kind of double bottom. It didn't hold. We got into on the daily more of a wedge formation, an expanding wedge formation, which is bearish in nature. Some of this is just review. Some of this we've covered. Some people are just talking over and over in terms of what does all this really mean, right? It's just we can talk through different time frames, through different patterns. As I'll say this, as we practice. Right, because it's nice to practice. It's really nice to see you guys practicing. As we look at the daily, it would seem to be a significant move if this were to violate this channel. Why? Because on the daily, we have what we've kind of defined as this bull flag. Okay? You see that? That's a big move on the daily. You see that? Whereas pay attention if you can. Whereas on the ascending triangle, we may be willing to push. If the price action comes down, we may be willing to push out. Okay? On the triangle, the entirety of the move can kind of adjust, and instead of here, well, now we're just down here, right? It can recover, it can recover, it can recover. The triangle just becomes, essentially at some point, it just decides to pour out at some point, right? So this notion, now understand this as well, on the daily, this can move. It can move. It can retract, it can move, etc. You'll see these move as they're being formed, all right? It's just consolidating the current price action right now. Doesn't seem like it moves very much. It's a real stagnant time frame. This bearish flag breaking out right now is the biggest thing on Bitcoin going. Okay? That breakout right there is a big deal, right? If we were breaking through a bull flag, it would be a big deal, right? Let's see, the direction, etc. Yeah, you're asking good questions, all the right questions. Well, you want a pattern to move just like, do you want one just like the preceding? Okay, what are the elements? Let's go through the elements of a flag formation, first of all. You know them from your book, right? Yeah, it's going to be a channel that goes against, it runs against the trend. The trend is down, the channel runs up. Bear flag, right? The trend is down, this cuts diagonally up. Truth. So, Jason, you want this, and you want to stack this, and that's going to be about that, right? That's what you want. You're going to run into an inconsistency if you try and do that, potentially. You're going to get into a range. You met it here, and you're going to get into whether or not you have an imperfect bull flag, which is would be a very astute observation. If you were to, let's say, if you were to look at a bull flag, right, and this is good conversation for you, Jason. You'll like this from what you've been studying. I can tell you've been studying. It's good. You have some time to do it. It makes a difference, doesn't it? Big time. Okay, if you're to look at a bull flag, just the pricing dynamic. Let's just do the pricing. Not that I'm drawing around the pricing. Let's do a mid-level something. Let's move up. The price moves up. It decides to go. All right. And that's our bull flag. Let's say that's a pricing action for a bull flag. We kind of be like, well, I don't really like that. Well, something like this might be a little bit better, right? Something like this, you're kind of like, well, you see that? Something like that. If we were to apply this to you get that, huh? It's like, no, we need that rectangular formation. We need that nice solid structure. And we need that channel slanting downward. A nice channel, it's not difficult to make at all, guys. It's not difficult to find at all. Yeah, that's what we need. Yeah, now we got that. So you see as we round out that top here, how much less of an expectation there is that it'll comport with anything really bullish. It's like, well, that's not really a channel. That's more of a, that's a wave formation. That's headed down, right? We're into the A, B, C, D. We're way past that. We're already heading down, right? And it'd be rare that you would see something completely like that. But you get the expression here, that, or the idea of the expression, the notion is that, well, if we start to really roll over, we're really going to roll over, as opposed to moving up with a strong sentiment and digging in, and bam, we got more pricing, huh? We're not done going up, huh? Right? Yeah, bam. So we're still very directional, right? To an extent, we're very directional. We're ready to crank up. We're letting things consolidate, right? Instead of the alternative that, well, we're just kind of, it's rolling on over, right? So I bring that up because the bear flag that we're currently in, there might be an argument that it's kind of rolling over. It's kind of a sophisticated talk because people don't talk about bear flag formation. But when we do the run up here on this, or the run down on this bear flag, a nice, beautiful expression right here, okay? Perfectly completing its price movement within the channel right here. Yeah, you got that. So we have the run down, The vertical movement, essentially, that's the vertical movement serving as kind of the measuring guide. He's going to be the measuring post for the channel once that's broken out of. We move this down, and look, Jason, check it out. We move it down, and what do we accomplish? Like to a T, huh? Literally just perfection. Bam. Interesting, huh? So the question's going to become, on a bearish flag, on a bear flag, because you have here, and look at this, based upon the example I just gave you with the nice movement over here to the up, down, ready to move up after the consolidation versus the kind of, falling over, etc., rolling over. The question's going to become, okay, we need a strong pivot. Let's say we had a strong pivot here. We got into a channel, real strong channel. We got into here. We moved kind of laterally. Then we moved straight down. It seems like about straight down within the channel. Nice angle within the channel. Then we're kind of kicking up and out, etc. And the question is going to be a few different questions. Do you need a bear flag to move down? I don't think so. Not at all. It's interesting to see them, though. I mean, it's notable. It's noteworthy to see them. The structure that they maintain, do you need, we could get to a point of efficiency, whether or not you need them, or effectiveness. Are they more effective? Are they going to be more effective if you have a stronger formation like this on the corner, kind of on the corner of the flag, on the pivot, the first pivot of the flag? Is it going to be a stronger expression to the downside? It's interesting, isn't it? Because on the way up, as we just discussed, for a fact that your flag is going to be comprised of a real strong, original, and you see that a lot of times when the price is going up, right? You'll see the price go up and it'll push and it'll push and it'll put. You've seen it before on the charts. He's pushing and he's pushing and he's pushing, and then it'll just go right. It'll break down, and so they set a real strong pivot on a lot of those pricings, right? Those pricing, the pricing action, just it reaches the threshold and just boom, you see it just drop down. Yeah, he just set his pivot. Now you guys know when you see that in the price, you're like, no, he's about to throw that down. He's about to cut that loose, and you see it when he does. So this has a very similar kind of effect to it. It can have a similar effect that I want you to think about when you see the price action moving down. Just consider it moving down like this so aggressively. Think about this. This is good thinking here. Okay, so aggressively that you're going to have it just like when something's going on the upside, and then he's pushing, and then bam, and it breaks down. Something so aggressive on the downside that boom, and it settles on in. You see? And that's what starts potentially the nice formation of a bear flag. It's that momentum to the downside here that gives you the trajectory back. The momentum here, could it have been compromised by a previous level of, that would be the other question, could it have been compromised on the uptake here by another level of, I'd say, potentially, of resistance? Potentially. That'd be interesting in the dynamic to kind of explain things that way. I'm not sure that it really changes kind of what makes a good bear or bull flag a good bear or bull flag, right? It's just, but within the dynamics, understand the nuance therein. The nuance being that we could have run into a line of resistance here, whereas this could have really gone back and done something nicely up in here, right? Instead, we ran into resistance that due to the momentum, we were able to get through here, but we ran back into a line of resistance. That would be consistent with what? That would be consistent with your double bottom over here, which is right in line with this right here. If you look at, there's a dashed line that goes across. If you pull up your 1 daily on Bitcoin, this is right in line with this. So this previous support has kind of turned into resistance, which is one way of explaining why we don't have a perfect bull flag potentially. Okay, so you would want to you would want to cover that issue, because now what you're caught with, if we do move to the downside, I hate to say if we can move to the downside, well, better prices down there, better pricing action, right? At some point, it's going to be better pricing action. If we're not going to fulfill this, the entirety of this wedge here, of this channel up here, I mean, all this has been waiting up here, right? That's something that's been waiting, right? We've been discussing this this expanding wedge for a long time. They can pick up in a heartbeat. That'd be great. I'd love to have that. We don't have any bullish indicators that are kind of that are alarm bells that are going off right now. We just don't. And so, in terms of this, we've known about this for a while. The question, Jason, you want to talk about the pricing target on the downside. If it chooses to complete, and you know the reasons right now as to why it may be a little incomplete, right, or why it might not be as effective as you would expect it to or hope it to be, right? Because you would want that nice formation, just like on a regular bull flag. Not everyone's this picky, okay? But like you're going to be, not everyone's going to be this good either. All right? We make some critical distinctions, and we enjoy making them. It's not that we're better than anyone else. We just pay a heck of a lot of attention. And the only people who really view us as quote unquote wrong, they're probably just not paying enough attention. Because we cover it, if we're, we may, try and kick something off, have some fun, do something else, just to kind of see if people are paying attention, to tell you the truth. I mean, sometimes we do. You guys know that too. But, never nothing detrimental. But get people thinking sometimes. So, yeah, the good thing is, while it appears that is a big difference in terms of the line of this channel or not, it's not that large of a difference. It does make a difference. It does definitely make a difference. And I'm going to draw my fib on this specific chart. This is a cleaner chart for us to look at. Let me draw the fib on this. I'm so glad you guys are learning about Bitcoin. It's a cool thing. If you get certified by the New York Institute of Finance, you will learn about its creation and everything else. Excuse me. 6386 410 863 310 6486 is the published maintained figure that I have been given, and so I want to input that. We have our levels, and it doesn't quite get us where we need to go. Where we would need to go is, and we can bring this up, we may be getting back to a key level right now, which could be fun for everybody to play. That'd be good for everybody. Let's see. All right. Let me get over the hair. That was not good. Let's see. 64, 863, 10. Okay. And make sure that this is properly done. Did we just change out of our BTC? Yeah, we did. Let me get back in here. BTC Europe. Okay, hold on. Euro. I have a chart for, and you guys may too. You may have a chart for the different patterns that you're looking at. And it's a great time for us to explore patterns. Everybody's talking about them. A lot of people looking tired too. I've noticed a lot of people looking tired. Like, man, we're just getting started. We are just getting busy. We haven't even started going yet, really. This is just, it's like, I'm not sure it's even really pregame. I guess it is, but. Okay. Let me get back to this. Make sure my charts are matching up. If you make big moves like this, make sure that you that your charts match up. We're close to the, you guys know this, we're close to the 50% retracement again. We've hit the 50% retracement multiple times. And that's a crucial issue. It's a real crucial issue. As we look at, let's see, how many times we've hit it. We just hit it. We've also gone below it. I'm not sure how strong of a level it's going to be anymore. That's the 32,431. Jason, to answer your question, I'm going to want to know whether or not you want it on. It's going to be more accurate on the. You're going to get different targets as you draw it out on the hourly versus the 2 hourly versus the 4 hourly versus the 30-minute. I can give you the daily, but you need to know there's going to be more volatility than that. So if you want to see the daily chart square up, and herein lies the real nuance. This is why I love technical analysis. This is why I love it. Why? Because we have a defect in the daily. That is cool. Hey, Mark Riccozzi, how are you, brother? You see that, Jason? We have a defect in the bear flag. Pardon me. In the bear flag, we have a defect on the daily chart that's not there. You know, I talked about like the gulch and this and that on the bull flag that we would have. Yeah, we have a defect in the daily. This is going to essentially this could dictate whether or not we're going to achieve a move down. And look at that. Let's see. No, it's gonna be like that. Like I did. Look at that. I did mess up my chart. Absolutely. Remind me to do that. I switched charts. But look at this. The reason we have a defect is because we don't have a strong pivot here in line with the channel. For a good bear flag, we need a good pivot, bam, down here in line with the maximization of this channel, of the upward sloping channel, which is sloping against the trend, which is down, to prove, to essentially prove to us that we have a bear flag to move down. This is a soft corner for a bear flag. It just is. It's a defect in the same regard that a bull flag would essentially, if this were the pricing, you have a strong move up, right? You see, everything's moving up. It's an incredible amount. The market makers advertising, hey, everybody, don't buy. It should be like, don't buy. I'm not going up there. Every time you see this, like it's going, no. This, when the market maker does that, he's telling you, hey, everyone, don't buy. I'm not going up here. Okay? Change the way you look at things. When you see a market maker doing this with the price, okay, change your way of thinking to where he's saying, hey, such and such, wherever you are, Jason or whomever, but he's like, hey, I'm not going up here. Oh, that's why he's doing that. Yeah, he's telling you, I'm not going up here. Don't buy up here right now. Just always, there's very few good things that can happen when you buy up in this area that he's not even really there. He's just like, I'll stand a second here. No. Okay, so we get this pattern here with a bull flag potentially. And if this is soft in the beginning, if these are soft in the beginning, it makes us think it's going to roll over, right? So we like to have a nice squared up channel, right? Nice squared up channel like this with a strong move to the upside, right? Yeah, that's what we like to have on a bull flag. You betcha. That's what we want right there on the corner. Now, we want the same thing on a bear flag. Nice, strong channel. We don't want a weak spot in the bear flag. Here is the equivalent of a weak spot on a bull flag to where we'd be like, well, I just want to make sure because, honestly, it's really not. It didn't start off right, It's going to make people question it. If it's kind of like that. Yeah? To the extent it's like that, yeah, that's just not classic. Yeah, that's not what we want. That's the wrong message. So we want to interpret this message in terms of where we're headed on Bitcoin within the proper dynamics, right? Within the proper understanding that, well, yeah, we should have, we could have really accomplished something here. We could have accomplished something in building a bear flag that looked better than this. You see, because we've just softened this out. It's like, well, and it's the truth. Why? Because we softened out the bear flag, and what did we build, Jason? You brought it up. We built a double bottom. Oh, so that's not real indicative of, it's kind of contrary to the notion of a bear flag. Because a double bottom is by nature bullish, right? Clearly. So how are we going to fit this is the big issue as we're talking about both things we've been discussing the whole time. How are we going to fit in as a part of a bear flag, a double bottom? That doesn't make any sense. Or they're at least conflicting. So that's a key facet of what we're really spending so much time going through right now. You want a pricing target on the way down? I want you to understand that we are in a circumstance, and I haven't brought this up because no one's really asked about it, etc. But it's very nice for us to discuss, is that we have a double bottom within what's being considered as a bull flag. There's kind of a technical conformance. We just came off a bear flag. I don't talk about bear flags much. We had a beautiful technical expression of the previous bear flag and its completion exactly to the point. Okay, exactly to this pivot on the daily chart, 31,393 or 394, pardon. Then we got a double bottom. That's bullish. However, in context, we also had one here at the beginning of the consolidation after a huge move down, right? Which we called here. And not like a waffle, this and that, everything else. What are we going to do? I don't know. You guys talk to Kent Gifford. I was giving him lessons during everything. I was giving him sessions, and absolutely, yeah, he, beyond a shadow of a doubt, going down. Bitcoin is going down. He's a good witness for me. Good guy, too. Hope you're doing well, Kemp. Let me read what you got there, Jason. Mark, Rakosi in the house. Retraces. Mirroring the rise up completely. Okay. Mirroring the rise up completely. Okay. Yeah, absolutely. There's a lot of symmetry going on, right? Down to, you have to look at, you're talking about symmetry. Down to, and this really gets us to the entirety of the discussion. Look at the bull flag on the left. It's interesting. They slant down against the trend going up. Yep. Then look at the bear flag on the right. As you're heading down, it slants up. Now, you're going to get into an issue like this on the daily where technically, you've got a bear flag here on the daily. You also have constricting wedges, different things on different time frames. But this would qualify as one that really overperformed in terms of its trajectory to the downside, right? So do notice that in terms of your understanding. Yeah, okay, so the channels slant diagonally against the trend. This trend is up, so it goes down. Okay. Nice bear flag. Bear flag with a double bottom. Problem is, if you look to the other time frames, and the story's always as complete as you want to make it, or as you want to discuss it. Have we reached a little bit of a threshold here? Potentially. Okay, potentially we've reached a little bit of a threshold. I just want to get involved in the On the hourly, that's going to be the 200. Yeah, the blue. Yeah, close. Quite a little drop, huh? Again, what didn't we have at the top? We didn't have a breakout and a confirmation. Move to the upside. Truth. Talking with VIPs in the back. Like, no. They're just like, no, there's no confirmation. Sweet, huh? That's awesome, huh? How cool is that, huh? Way cool, way cool. When I hear stuff like that, I'm like, yeah, we got a good group. We got the right group. Now, we talk about your answer's only as good as, kind of, as much as you're willing to explain it, et cetera. The detail behind it. Now, this and this forms this nice bull flag. Right? It just does. Forms a really nice bull flag. Now let's look at, and on this, you don't have the penetration like you do on the, and it's very interesting, on the daily right now, you're actually through the bull flag. Very interesting. So you have some contraindications. Truth. On the downside, were we to complete this, and I'm going to do this on the hourly for you, Jason, etc. Were we to complete this bull flag, and notice that the previous one we really outperformed, right? We definitely outperformed. Like, it was a nice, a nice drop. It completed. Not, that was a pretty nice drop there. This one up top was really phenomenal. If you were short the market here, you did really well. You did really, really well. Not that you intend prices to go down, et cetera, but you're always willing to make judgment calls, et cetera. Now, if we complete this entirely, let me do this real quickly. Let me get over to trend-based fibs. Let me adjust some of these real quickly. All right. All right, that's a little better. Now, if we complete this all the way, if we can take this just all the way, and I would say the previous interval worked out perfectly. It was a full completion of the prior interval's bear flag. The amplitude that fed on into it, okay? The vertical measured distance that got you there. On the daily. Here, it's different. Thus, again, we have another contraindication. If you're keeping up with this argument, I give you credit, because it's not a fun one to have. It's just not. We're talking about specified measurements, et cetera, and I know you guys may just be getting through it, and like, well, we want a pricing target, right? You want to know whether or not it's going to match up with your. Well, there's some good news. How about that, Jason? Had you already done that? Not too bad, huh? That market software must be pretty good, huh? I bet that market software is pretty good. Let's take a look at this. If I really line this out just about perfectly, this bear flag would drop you exactly down onto, like, precisely down onto your next level on the Fibonacci. It's real close, guys. Close enough you might want to, you would probably say that you would want to be, not overly aggressive, but a little bit more aggressive at the 61.8, at the 24,777 and 50 cents. That's a big deal. You see that bear flag potential move you right here? Look at this. You see this contact? Look at this. Boom. Look at this. Boom. Right in line. This is a perfectly, this Fibonacci right here is perfectly down to the, let me specify it and type in the actual calculatives of the all-time high and put it in at ground zero. That is the 61.8, the 24,777 The 65th percentile, the lower range of your golden pocket, is $22,702. $22,702. Below that, you have the 78.6, which is $13,880 and 50 cents. $13,880 and 50 cents. Multiply 64,863.10, which is the all-time high, 64,863.10, by 0.14, and you'll get another target. Multiply by 0.14, and you'll get another target. Specified and recognized within the industry. 0.14 would give you that target of the all-time high. People don't talk about that much. Let's see what we have here. Not financial advice. Doesn't mean it's inaccurate. Okay, so as we see that, the degree of the amplitude of this bull flag, you have to frame your mind around this correctly. We're looking at the bull flag, the upward diagonal channel here, which is supposed to, if the odds would have it, move to the downside. To what target? To the 60. Exactly, guys, the amplitude is exactly down to the 61.8. Very clearly indicated. That's nice. Okay. On the upside, we have an equally, almost said equalary. I was looking for a, not formulary, but what is it? There's a good word I was thinking of. I'll think of it in a minute. Equalary. There we go. Good job. It's been a long weekend. It's okay. As we look at the at this current pricing action, what do we know? The story to the upside's equally intriguing, and it's nice to discuss instead of forcing people to be right or wrong, or wanting an answer, or becoming, when you're impatient and you just want the right answer. Well, investing is all about taking money. About patient people, what is it? It's transferring money, as Buffett says, transferring money from the impatient to the patient. So we love to discuss things, right? Everyone does. It's part of the culture. It's part of the investing space. We like talking about the bear flag, and we like talking about it in the context of the ascending triangle, right? Also within the context of a contraindication on the daily that really the double bottom does contradict a complete formation of the bear flag, right? Which mitigates the likelihood that we would achieve conformance with the fallout of the bear flag, a lower pricing conformance with that, right? The very structural deficit of that on the daily, it lessens the likelihood that we would achieve this fallout. It makes potentially this ascending triangle theory stronger. It seems to have very good conformance on the hourly and on the other time frames. However, we do know that the daily seems to really give us the big picture, doesn't it? Yeah, the daily might be the one that winds up in the history books, right? So we get to discuss those things. They're nice discussions to have amongst people who like us who understand the technicals. And it's not a perfect discussion ever. It's not intended to be a perfect discussion. If you knew exactly what was going to happen, I would be afraid to be around you and your finances. Literally. If you knew without a shadow of a doubt what was going to happen with the pricing and you didn't have to play the market at all, you'll notice it's really not set up that way. It's not really geared towards attracting people. It starts to misbehave a little bit oddly when and maybe for whatever reason, but when people start to leverage their home and their house and borrow and do different things to invest, and wow, that's a little heavy, right? That's a little bit beyond just enjoying your time in the market, and that's what we hope to be able to facilitate as part of the crypto kingdom, right? It's just VIP, chill, relax. We have a good time. Yeah, we enjoy ourselves. We book trades. We're a little intense sometimes. Just kind of the nature of it, right? That's just how we are. So, very interesting. On the daily, we have a contraindication. Let's say we have a confluence in terms of the nature of, well, we have two bullish elements. We have the double bottom on the daily, and then we have the ascending triangle on the hourly. Both bullish. We like that. We'll tag those together. We'll tag them together. We have a bear flag clearly on the, and we'll need to distinguish, on the hourly. And the question's going to be, do we put up with a bear flag within an ascending triangle? Okay, that is the question that we have arrived to. Can we put up with, can we tolerate it? A bear flag within the context of an ascending triangle. Any thoughts? Jason, what are your thoughts? Crank it up in the chat. I know you're here. Jason is a member of the United States Army, Fort Bliss, Texas. What's up? Nice to have you, all you guys who are servicemen and women. We appreciate your service, especially on the day when the fireworks are going off, because we are a great country. We really like our country. We like it here. We're going to stay here. How about that? Let's see what we got. Shout out to Big H, my buddy, one of my best friends in town. He's a former commander, Navy SEALs, over Coronado for a number of years. We love you, Big H. We miss you, brother. So that's the stylistic question that we run into. Can we, and you guys understand the nuance of that? Can we have an ascending triangle that is comprised of a bear flag? If we can't, what's the technically exclusive fact? What's going to exclude the entirety of either the bear flag or the ascending triangle? The one nuance that we got into here could wind up being unfortunate to the extent that, and we need to make an adjustment right now. I'm going to make an adjustment on the screen. I'm going to clear all this up, okay? We ran into an issue. I'm not so sure that we needed to complete the entirety of the expression of the top, let's say of let's say in around 36,000 after we slammed into this retracement level of 29,000. We didn't necessarily need to recomplete all the way up to that level. But in defining the ascending triangle, we completed this level, which was nice because then we had the ascending triangle, right? Then we broke out of that ascending triangle. You guys remember that? Yeah, then we broke out, quote unquote, of that ascending triangle right here. So we have had to push, and we've had to make an adjustment, and that's fine. The whole thing's about adjustments. But you see how well put together that was. That was nice. We'll just roll through here. We'll be up and out of this place. When we pushed up and out, now it's still kind of indicated here with the previous zone of resistance as it tried to loop through here and come back up through here. So that's a confluent zone of resistance. That's fine. But it leaves us with another one of these gulches. Not unlike the same kind of deficit that we saw in, Jason, on the daily. And we'll get through this. You'll like this. on the daily, when we have Gulch right here on the bear flag, we just really like it to be more like this one. Yeah, this was a nice bear flag, right? Yeah, that's a nice bear flag. Look there. Full expression of the channel, nicely done. Oops. Well, that doesn't look right. That can't be right. Huh. Same as we wouldn't want that on our what would you call it? On our bull flag. Okay. We all followed through that. So we have some different options here, which you guys have already thought of them. We have a few different options because we had to push, right? We kind of had to push on the triangle. I'm trying to be deliberate in the way I deliver these words because it's not just easy information to assimilate. It's not normal stuff, guys. This is highly technical stuff. I'm just not running through it either, so you hear it once and you forget about it tomorrow. I want to make sure you understand. I started up VIP because I had too many people to give lessons to. And I wanted a cool place to hang out, too. I wanted some cool people. You guys have fit. I've learned from you guys, too. So as we look at this, remember we pushed on this. We pushed in terms of the top line. Yeah, we pushed here. After we broke through this, we had a nice expression of because I was one of the first, people to talk about. We have a nice ascending triangle. Yeah. We had to push after we broke through it. That's okay. That can occur real easily, right? Everybody wanted to break out on different time frames. It wasn't even indicated, right? But the 1 hour, the hourly is the 1 hour time frame is kind of like a key time frame, right? So we've broken down now. We have this gulch to answer our question of where we are heading. Or I guess we can talk about, let's see if we can think out of the box just for a second. Let's take a step back. We have this, we're going to go back to the daily to prove this up because you can't get away from this one. This wedge formation, this expanding wedge, they're going to call it a triangulation, just so you know, okay? Anyone is going to call it a triangulation. Believe it or not, the wedge this is a form of a triangulation. You'll see that. Go research it. Go pull it up, or I'll shoot you the information on it. This is going to want to do what? It's going to want to break down, right? Yeah, it's going to want to fall out of this to the golden pocket. Would be beautiful. I'm going to hit that thing. I'm going to hit it. Like hit it. And below that, the 786, if we can get there, I'm gonna tee off on that. That's gonna be fun. And if we get to one of my lower levels, it's gonna get serious. It's gonna be nice. I'm having fun now. I'll tear it up. I'll have fun now. I'm gonna hit some of those other levels. Because this part was fun, right? This area, this whole side, that was fun, huh? Did you guys do well? Did you make money? What'd y'all do with it? If you didn't make the cash there and you didn't know what to do with it on top, you'll know next time. You have to learn that lesson and don't let it kick you out of the market. That's the biggest thing I can tell you. Do not let it kick you out of the market that you made a mistake and it cost you money. Don't let it do that. That's how you miss out on round two. Period. Because the market's really good at doing that to people. Really good at doing that to people. It'll cost you a small amount of money, no big deal. You could have made so much money if you had stayed, but it just kind of ruined my, I just didn't feel like, that's how it, don't let it do that to you. Don't let it do that to you. You're with the right group now. You'll make better decisions. And if you find an inability, to do that, just contact me and we'll talk about it a little bit, see what's going on, because that shouldn't be the case. You got to make some rules, write them down, put it on your wall if you have to. That's just it. Make yourself accountable to somebody. I mean that. Make yourself accountable to somebody. I mean, it can turn into a gambling situation with some people. They just want the market. They see a risk, you guys understand there's some different issues going on. Those of you who want to be good investors, if you want to manage your money properly, right? I mean, you guys know. It can't be a gamble. It can't be a thrill. Those guys, it's the difference between business and kind of pleasure, if you want to gamble a little bit. So as we look at this, the wedge takes us out of the dynamic of the hourly altogether. True. It also contravenes the whole notion of an ascending triangle. Now, in terms of thinking outside of the box, assuming that we don't have a bear flag here or a strong bear flag, what are the other possibilities that we could do something with here? What else can we do here? This is thinking outside the box. What else can we do here that could say, okay, we have an inconsistency between on the lower time frame, we have an ascending triangle. On this one, we have a double bottom. Those are congruent. Those are both bullish. But we've pushed on the top side, and we pushed on the top side with the ascending triangle. Right, okay, so that has a defect in it now, which is important because it's confluent with our double bottom here. Truth, right? Okay. See, now there's a defect in the lower time frame, the 1 hour ascending triangle. Okay? Now there's a defect, arguably, in this triangle. Right? After we underperformed on the breakout. And this happens. But it's nonetheless a defect. And that defect now is of a bullish pattern that needs to kind of, I'd say needs to, kind of at least kind of remain on the books, in our books, in line with this bullish double bottom. So that's important. So what can we do aside from the expanding wedge? What can we do aside from, as we're looking at, because right now this is the big crux right here. What are we doing right here? This is the big issue everybody has. What's going on right here? We just want to know. Diagnostically, we want to know. Whether or not we got a lot of investors, or we got heavy cash here or there or whatever, we want to know. Particularly if it's going to go up, we want to know. So let's get our book. Jason, have you found any indications at all in any of the work that you've done on the higher time frames as to anything else existing, because you've been going through this, other than what we have found? I'd like to know. If you want to put that in the chat, that would be great for me to hear. I'm going to go back to the hourly. And I want to look at where is, and Jason, I'll look for your comment. Hold on. Jason and I were going to spend some time in around this time because he has a break from Fort Bliss. He's not blowing things up right now. Let's see. Okay, he says wait one, no problem. And you guys are welcome too. You guys chime up in the chat. But it's a pleasure for me on July 4th to be spending some time with him. And all of you. We really appreciate all of you being here. That's a cool way to spend the 4th, huh? Cool. Cool group. Not bad. Boy, this has turned into a mess, hasn't it? I just got to tell you, this has turned into an absolute mess. I want to see what Jason comes up with. It just has. We've been fighting back and forth. We've been working, trying to get the Bulls and the Bears, all this crazy mayhem from overseas. They've irked me about 50 times too many, and you guys all know that. I hate people losing money. I'm just not into it. If you're gonna lose half your money, to me, this is the deal. This is honestly the way I feel. I haven't really told you guys. If you're gonna lose like half your money, why don't you lose it at a price to where there's only one other price to go to, and then you can buy twice as much. That's about where I'm at, honestly. If you're going to lose half your money, just make sure it's at a price where if it moves one step further, you can buy twice as much. Is that a deal? Right? You save half your money. That's about the mindset that I have in terms of covering your risk exposure. That's it. Investing is not fun it's not entertaining to the extent that we come on, we lost half of our money up top, and now it's still expensive. Right on the way down, it was still expensive for people. As they continue to keep buying, and still encouraged that, now grabbing onto a tree limb when you've jumped off of the Empire State Building. Well, just grab on a tree limb on your way down. No problem. Yeah, there you go. People just selling it still at like $50,000. Oh, you're going to do great. Oh, come on. I won't get started. You guys know me. But but that's about how I am in terms of if you lose half your money, make sure it's at a price where you can, if it drops one more unit down, you can buy twice as much. I think that's a fair strategy. That covers you, right? Jag in the house. Nice to see you, Jag. Yeah, I'd love to see that picture, Jason. Hey, Jag, we're spending some time with Jason's lit tonight. U.S. Army, huh? He's out there fighting for our freedom, so we get to spend some time. He's going through some different stuff. We're going through some detailed analytics here. Good stuff, Jag. Like some deep stuff. You're going to like it. Glad you showed up. Jason's been on leave here for a couple days, so he's got a little bit of a break away from Fort Bliss, Texas. That's nice. And we're looking right now, Jag, for something else outside the box, completely outside the box. Jason brought up a double bottom here. The double bottom is confluent. It's in agreement with, because it's bullish, it's in agreement with the ascending triangle on the hourly. That's the daily has the double bottom. So they're not inconsistent. That's important. They're not inconsistent, right? So we see it is sending us the same signals in terms of there being some kind of reason to be bullish with a lot of reservation because we're amidst retracement. And it's like, our breakouts aren't going well. I mean, what just happened? Like, this didn't go well. I mean, God, we have to look at this, guys. Look at this. Everybody pay attention while Jason's sending me that stuff, all right? We had this. You guys ready for this, huh? Be ready for this. We had this ascending triangle, right, on the hourly here recently. I'm really excited about it. I'm pulling up. I'm telling everybody, check this out. This is the pattern which can form a base, can form a reversal of the retracement, period. It can. In and of itself, it can, period. It's been known to do that. And then what happens? Well, we push. Why? Because we tried to break through and establish it as confirmation, and we couldn't do it. No, we couldn't do it. Okay, Jason, I'll take a look at that. We just couldn't do it. We got up to, 36. Let's look on the candlesticks. Well, we got up to 36,575, and that was just quits. That was just it. So we pushed up. We tried to get through this, and it was nice, guys. We had, kind of bullish, not exactly flag, but kind of a bullish formation, just appreciation in price. That was nice, right? So we had to push up. And when we pushed up, we created kind of a, a little bit of an issue, right? Where now we're kind of still maintaining, we're still operating underneath this, in what would you say, in kind of a space that it's non-ideal. Let's say that. That's a good way to put it. It's not an ideal situation. We don't like this gulch here because we're looking for issues right now that explain whether or not we're going up or down. We're looking for issues right now that explain why, in addition to that breakout and, retracement back into the original, we're supposed to break out of this pattern. It's supposed to be over, right? Yeah, we're supposed to get bullish real quickly. Now we had this ascending triangle here, and look what happened here. This happened today. Now that's that's kind of severe there. You have to admit, huh? That's a little bit severe. That's not supposed to happen. Hold on, because that's just kind of like this deal. I have to say, honestly, I really honestly have to say, and I think you guys will agree, because we had this bullish triangle, right? We had that all set up, right? We had the ascending triangle. Everything was going great. We had a bullish setup. Everything was good, right? And then what happened? Well, we busted out of that, and we just fell right back through. We didn't even achieve confirmation and go to the upside. Then we had this other, deal here. And guys, we had something just, right upon, this whole line here. And we couldn't get out up and above that. It's like something just literally just, stepped on this. If we go to the lower time frames, you'll definitely see that, right? In terms of the triangulation, it was a real strong triangulation. Let's throw a little good news on this. Just a little bit of good news. Just a touch of it. Not much, huh? Not much. I think the good news is that this thing's almost out of time. Everybody's like, thank gosh. But I mean it in a way that, like, it actually should be out of time. Because you'll hear that from other people and the warning signs, the signals, and the sirens, all that crud. No, I actually mean like maybe this thing is almost out of time. All right? And I mean the formation and everything else. Because I'm not sure who is really stuck with this issue right here. I'll get into some different ideas in terms of what we can do with this and how we can look at it, okay? But this does not want to go up, right? Now, what if we potentially just formed? Everybody knows this is not good. You want to get outside the box for a minute? I don't know. All right, and we'll go back to the daily and take a look. Now, it doesn't have to be a head and shoulders. You guys know that. It doesn't have to be. It could be a double or a triple top. Jason, you brought up a double top. True. Could be, Jason. We don't know. You don't know the answer to that question. Although we would expect this to really spill out if that were the case. It's not costing them that much on AMC, believe it or not. There's a lot of hype on that, in my opinion. It's not that big of a deal. It's consolidated and frustrated the heck out of all the guys that were long on that with all their dreams getting paid out millions and billions of dollars. The little kiddos. No. It's okay, but, as long as everybody had fun, that's the deal. Don't be a problem. Like, have fun. Like, be cool, have fun. Like, chill with it. People want to take down banks and everything. I was like, come on, man. Come on, man. Just, it's a good thing we have them at all. So let's look at this. Are we forming the other options that we have right now immediately apparent, or are we about to form? And I'm just going to throw a wrench in this plan because on the hourly, this line right here becomes your neckline, right? Yeah. So this right here becomes a real severe, hey, how you doing? We're going to be going back down to, a level. If we don't play the bear flag on it, just understand that we already have the neckline perfectly lined out by the so generously, now we can just say so generously overperforming, isn't it? Because now it conforms to a head and shoulders. And it's kind of wild on the left-hand shoulder. I'll give that to you. Clearly this. But it could happen. On a different time frame, we can look it up and we can wrap it up into some conformance. So just understand that. That's not ideal. Neither does the left shoulder. But you'll see some head and shoulders work out, and other ones won't, that you'll be like, well, come on, because that one shouldn't, right? Yeah. You'll see those work out. You'll see the wrong ones work out, and, you'll see some real right ones that don't. So that is one danger of the – well, it should be going down. I'm going to give that to him. Let's get up in here, and I'll give that to him. I just wouldn't be surprised with this. We're going to have to operate like that, which I wouldn't really recommend doing on in between, and we did cover candles before. If you want to stay away from this idea, I would recommend it. You don't have to. It's a good way to think about things, but you also need the price extending further and beyond, which means you're going to need to draw it in the bodies of the candles. So you can draw that on the bodies of the candles. If you would like to do that, feel free to do it, and then you'll still have the pricing extending beyond through the actual wicks, etc. So the question is going to be, ultimately, Jason, as we get exploratory with this, just a touch. And let me look at, I'm going to bring up what you brought me in the DM chat. Let me see what you brought. Let's all take a look at this. Okay, you guys got this symmetrical triangle. Did you guys read this? I sent you the symmetrical triangle definition that we're currently in the symmetrical triangle, which is a continuation pattern to the downside. Did you guys get that? I hope you got the tweets. Make sure you sign off on those with your heart. Boom. Just that like button. That's real important for me, okay? Excuse me. Okay. Okay. So you like a channel. And you're on what time frame? 4 hour? Okay. Nice. Nice choice. Like that choice a lot. The 4 hour. That's a good choice. That's a good time frame. And I mean that. I'm not just saying that just to, say anything. That's nice. That's a good time frame. Okay, so Jason has thought outside the box, and he's just come up with a generalized channel, which is nicely done, and he just likes this right here. Well, I guess kind of a potential breakout. Let's make sure we can demonstrate this well. And that's going to be a continuation channel. That's what I would assume, huh? You're feeding into this, it's going to be a continuation channel, right? Okay. Now, the length of the channel, do you care about this at all? Being constricted on one side, do you want to play with that, or you just kind of, I don't blame you. If that's your style and that's what you see, is cutting through those lines, that's fine. Andrew's in the house. Nice to see you. Happy 4th of July, brother. Very good to see you, Andrew. We've missed you, brother. Glad you and the family hopefully had a great time. we are looking at some exploratory out of the box and have gotten a little bit deep into some issues as we've been digging through the book. And I just want to, we have Jason is, he's U.S. military, et cetera. And we're cutting through a lot of the details on the 4th of July. He let me know that he needs some time and attention. So I thought it'd be cool. We help him out. He is military loud and proud, and we support our military. I think it's cool. We have a lot of military members, et cetera, and so we're going to be helping him out. Andrew, if you want to stick around and help us, that'd be awesome. I know you definitely can. Andrew's one of our top supporters, and he is a dynamic trader. He can trade the daylights out. I mean, he literally can. Just phenomenal. Like one of the top. He's good. And I've known a lot of them. He's good. That's cool. So as we look at this, I wanted in between just to recap real quick on this. We covered the fact that the double bottom here is congruent with this is a bullish indicator. It can serve as a market bottom. We failed the one up here. Okay, this is the most recent 45 days. We failed this one. This one here, we could hold. It's in congruence. It agrees with the hourly ascending triangle that is at the same level that got thrown into the mix here before we decided to try and go ahead and break out and go bullish again. Once that occurred, we have frustrated up, and now we have kind of a deficit in our triangle formation. It's not fatal, but it's enough of, well, it'd be nice to have. We talked about bear flags on the daily. We're trying to see agreement between different time frames. I'm trying to explain that, and I'm going over that with Jason, U.S. military, so that we all understand how to do kind of comparative analytics on our charts, because everyone wants to know the right answer. Well, I'd say you can come up with some degrees of probability if you can find the levels of confluence or agreement amongst the different components of your chart. 99% of our chart agrees, every time frame agrees with this one point. 99% of it. There's one small, when you get to that level of analytics, and when you have big money potentially, riding on things, or your success in the market, when your success in the market's riding on it, or Jason's is, or anybody else's is, yeah, we want to make sure we spend the time. We go through different time frames. It doesn't always take this long, but the process, just watching the process is good, and we would love your input in the chat, et cetera. Feel free to light up the chat. You guys are welcome to do that. So this double bottom is consistent with that ascending triangle. This is on the daily. That's on the hourly, the 1 hourly. So that's nice to see that. It's nice for us to see that. We did have a real interesting expression of, let me do this, a real interesting expression of a bear flag here on the daily, okay? Bear flags cut up. They cut up, they break down, all right? And they're just like a bull flag, just in reverse. Look at this. They cut up, they break down, bam, right in line with here, okay? Let's make that exact. Bull flags, they cut down, they break up, right? So yeah, that's just about right in par, like right. I mean, almost perfection in terms of the actual, the level, the actual the magnitude, the amplitude that we move, right? Flags fly at half mast, right? Even bear flags. All right, good. So we're in the process of dealing with another issue here that Jason has said on the 4 hour, and I'm trying to think outside the box for a minute. I'm trying to say, okay, what haven't we thought of? What else can we think of that can give us a little bit other than what I've defined since the beginning, which still holds very true, very, very true, is that we have established, and I think that's one of the primary things, that anyone who's onto this is onto the right answer. I'm just going to tell you, period. There is a right answer, okay? The larger time frames will give you the right answer. The smaller time frames will generally let you trade, right? So we need, it's not the right answer for you right now. I get it. That's cool. No problem. Now, looking at this, and I think Andrew brought up a rising wedge, and we discussed that earlier. Andrew, is we're in a circumstance, we're in a situation now where on the daily, we're actually in the process of just about breaking through this line. That's an interesting component of the daily right now. Interesting component. Now, we can say this is the equivalent of the ascending triangle. But when we think outside of the box, and Andrew comes through like a champ, very interesting, is we get into an ascending wedge. I assume this is where you were talking about it. And the issue with that is, I think on different time frames, you'll still see something in line with this, and that really did a doozy on the market, right? That one, that was something that ascending wedge, yeah, that was something that really, was something to write home about. Ascending wedge is bearish, clearly bearish, and it just makes sense. Think about it. It's a run up. All it is a temporary or even extended, any kind of a run up. At some point, it's going to break down. It can get confusing. An ascending wedge, just kind of turn it a little bit further up, and you'll get it. It's essentially going to break down. Now, the only difference that you're going to get into that's reasonable, if you have an ascending triangle, you guys know this, an ascending triangle is going to just prove, well, the buyers keep just hitting this thing. They just keep, they're maintaining their line of support, right? That's an ascending triangle is always bullish, no matter where you find it. Just no matter where you find an ascending triangle. If this had been an ascending triangle right here, you would say, well, that's bullish. Whether it's not it's on the top, whether or not it's on the bottom. Okay? Those are just the rules. Excuse me. So, yeah, if Andrew is correct, and Andrew's very good with his lines, he's extremely good with his lines, then we are potentially looking at this ascending wedge. The last one really hurt, right? And it's not much different than said ascending wedge, right? If you really look at the parameters of it, and I wish we could, let me get rid of this RSI so you can see more of the screen, hopefully. Make sure you guys can see all the screen. Excuse me. So what we have is a very similar move, guys. Very similar move. We have a move down. We have about a midway expression of price. Then we have a kind of a dog leg hook up to the top of the wedge. Then a move down, move up, and down. It is almost pattern perfect. Move down. We don't touch the bottom. That's okay. That's one variance. Then we have, unless you want to call this the first move down, we can call this the first move down. That's fine. If we call this the first move down or we dogleg before, that's the variance in this area right here. From this, we move up. We have a dog leg up. Maximize out the wedge. Move up, dog leg up, maximize out the wedge. Then move down and up, down and up. We literally, if you guys will look at that on your daily, it's real close. We don't have a complete M pattern formation on the right-hand side. But it's really close. And that one had the courtesy and the kindness to achieve a confirmation. Isn't that nice? So while most people are excited about, well, it's getting back into where it needs to be, well, that one had the courtesy. Notice that on this wedge. You guys see that? When I'm not joking, guys. It had the courtesy to achieve the confirmation. That'll work, huh? It's going to tell you it's about to blast to the downside, like period, like get ready. This even copied up on the daily, copied up inside as a confirmation into, you guys know this is highly programmed, beautiful, beautiful price action. Very highly structured. Very difficult to get wrong. Very difficult to get wrong. Look how close you are to the top. Well, I mean, how would you have known? This is the thing. Well, how would you have known it was near the top? Look how close you are to the top. 59,000, 58,000. You're really close to the top. Look at this. Hook down and turn into a confirmation. You see that? Isn't that nice of it? That's really nice. I think we agree. That's real nice, huh? Confirmation right here. That's super nice. It's on the daily. Daily's telling you a lot. Big time, huh? Any of these small little move confirmations, yeah, it seems like we want to watch out for those. And we don't necessarily have one of those right now. That's fine. But we are breaking out of this. It may be an indicator, Andrew and company, right, that we would definitely look at, like, we're clear of this issue right now. We haven't gotten those confirmations here. That was a pretty massive move there. You got to say that's a pretty massive move here recently. That's a big move. This was probably twice as big. So we'll keep an eye out for the confirmation. We don't know that we'll get it. But breaking out of that wedge is a big deal. I'd say it's a big deal. And we have to get into, I bring up the confirmation on the higher wedge, Jason and Andrew, etc., Jag, everybody. I bring that up because that hit is validated. You see that? Believe it or not, that hit is validated as being potentially, I'd say potentially, huh? But, it seems pretty validated after you look at, I think you guys agree, at least you see the argument for it. It's not as beautifully well scripted, just you draw this one out, right? And that one. But it is, I would say it is validated for that reason, just coming up in here. So it is expressive of it confirms what you're indicating, Andrew. The question is going to be, as we look at the potentiality for some sort of triangulation, is it going to want to kind of push? The problem is, because, we would say, well, can't we just turn it into an ascending triangle that's really, really, the problem, however slight it is, it's not sending us that message. Why? Because we have this hook here. And I would give some deference to that hook, particularly given, or if not solely, generally I would. But it's odd, you might not. These are the reasons why you would. And always remember this as a reason why you would. Yes, it could be more expressive, but that's some quality charting right there. And that's a good lesson to learn as we take that home. We'll always remember that on Bitcoin. That's a big deal. Yeah? That's a big lesson right there. Boom, boom. To see that, never forget that. Boom, boom. It's like buckles, huh? Literal, like buckles, like steel chain buckle, just bam, just buckled right on there, right? That's a buckle fastener. Yeah, that's right on there. And it's on there. It needs to be on there because you have this line here, and that it fits up perfectly within this top right here, which denotes the fact that you're going to be you're essentially gonna be at a slope here that's not parallel. That makes a difference because it becomes an ascending wedge. As a matter of principle, looking at this chart, this becomes an ascending wedge. It falls out of the scope of an ascending triangle here. So that's a big deal. Now, if we went like this, I don't think you'd want to necessarily, but you could. That'd be the other option. We say, okay, because we definitely have the double bottom. Then we have just recreated the exact previous position in line with an expanding wedge, which has already fallen out, which I brought up beforehand and have been real specific about, well, I'm just going to push this down here. But as we get more specific and really get into the nature of what we're looking at, and you guys know I brought up that expanding wedge right about the time before this decided to happen, right? In this area. You guys, I think you remember that? Yeah? I've been talking about it since. Well, yeah, we're just going to, we're going to, okay, well. Being laser-eyed with it. We're down potentially from here. It's interesting to hear, arguably. Looking at it this way gives you a completely different mindset in terms of, now you're making some assumptions, okay? You have two quick hits and one light buckle, right? One fastener, light little fastener here, right? So we're making some assumptions early on in this ball game here, real early, but we went through it kind of, essentially the homework on it. This, it's kind of early too, but what we're running into is something that looks just a lot different than what we've been considering. So the further we delve into this stuff, the more accurate we're going to be, the more complete our expressions are in terms of our communications with each other, right? I mean, a lot of times we're just, we're hammering through stuff. We get to the next trade. You got your accounts to manage. You got your family, your lives, everything else. So it's good for us to stop. It's good for us to delve into things. Doesn't mean you've been incorrect, or doesn't even mean this is correct. But this isn't out of the box. I said, let's go out of the box. Let's get out of the box. This is legitimately out of the box. And it's textbook correct. Textbook accuracy. This is correct. I'm not talking about I believe, no, it's correct, right? It's correct. And let's do, I'm just going to bring this up. You guys don't have to, like it. It's probably too bright, huh? Wedge formation. Let's see what we have. What page are these wedges on? Do you guys know what page the wedges are on? I need to find it in my book. You guys tell me which page those wedges are on. The symmetrical. There we go. Right here. My wedges. All right. This right here on the bottom right. If you can see on the bottom right. That's a big deal. Continuation, feeding in, down goes down. That's John J. Murphy, Principles of Technical Analysis. Okay? Bearish. Feeding in from above, continuation pattern, consolidates, and breaks down. So I brought this up originally, truth. As we get into the technicalities of it, have we broken down into something else potentially like this? Well, either something that looks like this, and once you draw the thing I like about this, and I don't think it's inconsistent with what Andrew recommended. They're congruent to the same extent that the double bottom and the ascending triangle, and that's a double bottom on the daily, and the ascending triangle on the hourly are both consistent. Well, this is essentially, and that's be something we could look into, but the ascending wedge would be something that would be consistent with, I guess the current internal structure, you'd say, of the overall expanding wedge. Expanding because we do have an expansion on the wedge. They get into like a symmetrical, what do we call, reverse symmetrical triangulation, etc. It's under wedges if you look at it, okay? But these kind of work together right now. His isn't saying, well, we're breaking out to the upside. You get that? Like the double bottom worked within the context of the ascending triangle, right? This double bottom here worked in concert with the ascending triangle, clearly, because they're both bullish, right? And it's interesting to get into two patterns immediately that, it just, and within the context of where things kind of were going, you have to say, because we have the ascending triangle. We have still, the ascending triangle. But Andrew and I are bringing up right now, well, we have two bearish things right now. One is an ascending wedge, which we've handled this hook right here. Pretty cool. Up top, right? Those buckles. Let's take one more look at those buckles. You don't see buckles like that. I mean, you do, but they're special, huh? This confirmation, ba-boom. Confirmation, let me loop in here, ba-boom. Ba-boom. We covered these close to the time they were happening. Like, whoop. So you see those little fasteners, little buckles right there. We have just confirmations. We have one right on the inside of there, denoting something, kind of denoting just like up there. Yeah, okay, we're on the inside of something. And now we've established something. There we go. Reconfirming something. So it's nice that ascending wedge works in concert with, and they're not inconsistent. That's important. Because what you can say, well, the ascending triangle is supposed to break up. No, it's not inconsistent. If it were supposed to break up on the top line of resistance, then it would be inconsistent with the overall broadening wedge that I've drawn. Which just proved, that's interesting, which just proved that this is correct. That I brought this up. John J. Murphy, New York Institute of Finance, credit given to them right now because it appears as if they were correct. Now, we were expecting a big move. But do look at this, guys. This is a 1, 2, 3, 4, 5, 6. Okay, we have a expression within a number of turns here. 1, 2. Yeah, we have an expression up, and down, right? We have up, and down. With the first hitch on it, right? We have up, and down. Let's just look. Up, and down. Out. Textbook. Pretty cool. Now, I like Andrew's theory here because we've hooked up, in the midst of this, we have literally hooked up amidst this on the way out. It's just a wild formation, huh? You have to give it to it, huh? You give it to Bitcoin. Check it, guys. Because on the way out of that wedge, what have we done? We're literally pouring out of that wedge, and we're like, well, let's hook up into here. We're going to form us an ascending wedge, and this is going to be interesting, right? What a crazy look. I mean, you have to look at this and appreciate it. We got this up, and on the way down, couldn't be more accurate. Up. And on the way down, what we do is we hook line into an ascending wedge to really throw it sideways, huh? It's a pretty cool, it's a nice chart, huh? It's nice, huh? It's got some action to it. Now, your ascending wedge is going to want to break down. Your two bottom lines here of the Two bottom lines of the two pivots give you a double bottom. We failed this double bottom. We failed that. If this pushes into a moderately lower low, we would give credence to this and keep it within a broadened wedge formation. The same we would do were it to establish a bit more of a high. We would probably allow it to push and just expand the wedge a bit. This is the problem. This is why they pour out. Capiche, huh? Yeah, because, well, we really didn't beat it. Well, we still haven't really beat it. Now, it can go around and hook. Like it came around here and hook, and it's proving to us that, well, okay, because you guys got that from me, right? You got this. You guys got that. You know that, right? Like here you go. Everyone else is talking about this other stuff, right? You guys know everyone else has been talking about all this other stuff. I'm like, well, y'all saw this, right? And you saw it, right? Before this. If it was after, let me know. That'd be interesting. I really don't believe it was, but that's okay. I don't believe it was. If it was after, I'd like to know. I'll find out. I'm almost certain it wasn't. I don't think it matters. Like if we can find the New York Institute of Finance book that all Wall Street uses and show exactly what this is, that's fine. I'll do that as a research project on the weekend. Like, no thanks. I don't want to do that, right? So anyway, yeah, it was before. Don't worry about it. So as we look at this, now we have on the hook of that, it's just cool. I like this. I like price action. I like how crazy this looks. You have to understand how crazy this is. You have a huge pour out from something that was $64,000 a piece, right? A coin or whatever. You have an ascending wedge here, which completely demolishes the price, just absolutely allows it to rip. You have all of the world that is currently expecting this thing to be strong and continue. And you guys, I'm ready with big cash, lower levels. I'm not bragging. I've just been ready since here. Like, this is great. This is fun. Yeah. I'm going to take the cashola is going to be underneath, right? The major cash is going to be underneath. I like this price action. Let's repeat it. And I'm ready to repeat this. This was fun, right? So as we look at this, if you guys aren't members of the VIP, you need to join. We have over 100 members the first month. Just guys who know how to trade. They're kicking it. We have back rooms with full cool stuff. Cool stuff. Exclusive charts, 2x, 2x, 3x, 3x. All kinds of stuff. That's true, huh? It's getting that way, huh? We're going to push that idea. We're going to get. I'm going to make it where y'all aren't doing your job right, huh? Are y'all trading or not, huh? Well, we couldn't have made 2x on this. Well, yeah, it's going to be. You should have made a 50x. Well, we only would have made a 30x. Oh, okay, I see. We'll see how it goes. We'll see. Judge the temperament. It's fun. So as we look at this, they like new coins. So as we look at this, that's a chaotic kind of principle here. That's a chaotic little, jaunt to the upside. This a little bit more interesting because we know what the last one did, and we kind of impute to it a little bit of, okay, this one's cruising up like this, and bam, huge pour out. Now we have another one on the tail end of something that should have kind of broken down further. Maybe. I mean, we would have expected maybe to kind of break down further. But with that preceding interval there, it's kind of like, whoa. You have to admit, because it was a big deal up there, right? This ascending, wedge really got the best of a whole lot of people. There have been other ascending wedges around here, if we put our finger on them or not. Okay, so we've been through this in the completion of it, so don't completely freak out. But it's just a nice trailer hitch here that's just oddly formed. If we take the ascending wedge off, I think it really provides a nice dynamic to the fact that we have really shifted downward in line with the analysis on the channel here, the consistent analysis on the channel, and we have given, okay, we'll go ahead and do this, do that. Let's just go ahead. I've been doing that, given the hitch formation here, and to do some real legwork, because we've been busy trading, busy doing a lot of things. It's good to get back to the fundamentals of technical analysis, right? Always. So this is like a nice, it seems kind of elegant. It's nice. in terms of the expression that, yes, there's been a shift downward, that potentially this could be the new line of resistance, which is in line with what I just talked about earlier tonight before a big breakdown of the golden pocket. Short video. I just disseminate the videos and copy up some brokerage houses, etc. Just for fun. Just for fun. And they know it's not financial advice. This extension, the golden pocket, acts as kind of a magnet. It wants to draw itself there. It also wants to use it as what do you call it? As a resistance, right? So it's going to want to potentially go there at some point, but as soon as I kind of brought up it's going to be a resistance, for some reason it just boom, right? I'm like, well, anyway. It's just the truth. We talked about first mover advantage as well. Well, we're going to get there. Everyone's going to sell it at $100. Well, we need to get rid of ours. Okay, well, here, I'm going to give you mine for, $99. I'm going to sell mine at $99. How about that? So, to what extent that began to occur, I don't know. Was it close? It got up within $300 of that, and then boom. So, candles looking a little differently today. I went over something kind of cool with candles. May have driven some people off. That's okay. Doge. So, yeah, now in the context, I'll say this. In the context of this space here of the wedge, if we can kind of distance the one benefit we get right now, and we're not thinking this way at all the other channels have us still parked up in this left area here, right? And we've been kind of frustrated the last few days. It seemed like we have less volatility, right? It seems like there's some things going on. It's just, it feels different. This was really exciting, right? And it was coming off of, it was a huge opportunity to make money off of a huge fall down, right? Huge fall down. Boom. Nice bounces, huh? Nice. I mean, we all, we were trading, I traded Bitcoin on the front side, so you guys know. All right? Successfully. Very successfully. So, this here categorizes us differently than up in here. Up in this area here. This was nice volatility, everything else. This has just been kind of real tight, real narrow, looking for some degree of excitement, etc. So we've been trying to create the excitement. I think we've done a decent job. And it changes the way we start to look at something like this a little bit, but we still have this componentry, which is now contraindicating unless we go with the rising wedge. We're already through the lines a bit. We had to push the ascending triangle. So the question would come about, would you get into something that kind of looked something like this? And I'll go back and draw what we did have on the daily. But if we're into something like this, and I would just aggregate around, I would draw through where the bulk of the volume has come in these areas thus far. And it's no genius move by me. I understand that, right? Normally when I do something that's not a genius move, 9 times out of 10, I understand it's not. I'm trying to cover something, but I don't always sell it out like that. Like, well, it's not a genius move. I mean that about me. I'm not reinventing the wheel here. But this here is intended, and it is important to the extent that we understand it is supposed to fall out. So while others are going to be looking at, and here is the key feature of this evening, and I'm glad that you have stayed this long. Because while other people are going to be looking for a support along the lines of an ascending triangle, which has made the kind of mainstream effect, etc., which I don't disagree with, but we kind of blew it. I've gone through the analytics as to why we may have blown it, okay? And the big portion is, well, we pushed. We had a chance and we pushed. Okay, so we had to move that up, right? By pushing this up, we do maintain this previous level here of resistance. That's nice. It's a confluence right there. That's fine. If we were to do something like this, right? That's fine. We're in line with something that's still kind of agreeable. We're gonna push up, but I don't like this gulch in here. When we could have gone up, achieved a confirmation, and moved up beyond this. We don't have a problem in this game getting a confirmation. If it's there, we're going to get it. There's no problem. I'll just briefly bring back up the daily so you can see when we need a confirmation. I don't even care if it's on the daily. Look at this. This right here, looping in like this into your expanding wedge that before the series kick to the downside. Yeah, we'll get the confirmation, guys. There's no question. Boom. We'll loop into what we need looped into. I guarantee you. Boom. We'll get that. If it's indicated positive or negative for the price, it'll come up like that. You won't be able to forget that image. That's strong, right? And that's also, that notion is copied up through this right here. A loop in just like above. A loop in from this previous expanding wedge. A very bearish setup. Continuation pattern, boom, to the downside. Continuation pattern, boom, sorry about the eyes, boom, to the downside. That is not just a cheat sheet. That's a 600-page reference book that I've been reading since high school that belongs to like published materials like Extraordinaire on Wall Street, period. I mean, whoever, literally, that's the book on Wall Street. So when I pull something up, it is not a Google page, just so you know. It is not. It's not. So it is the book, period. That's all we handle is the book. We don't mess around. So that's interesting. The lines, I brought over the lines now, excuse me, because that ascending triangle, let's go back to the hourly, because that's the debate we're having now is, well, can we maintain that ascending triangle? All right, well, we've pushed it. Let's push it. Let's see up to here. Let's say we push it up to here. Let's go back to the daily, and let's see where our lines would be. Yeah. All right, well, not seeing that. Let's go back to the... See, I don't like this. And the problem is we've done this once, we've done this twice. Meaning, what is it, this that we've done? We cruised up through here. And this is the bad part. I don't like this now. You see this? This little hook right here it decided to give us? Interesting. Because that is indicative that it's telling us it knew it was there and it didn't want to do it. So we weren't wrong. I'd say that. That's indicative of a failure right there. Which what? This failure right here, this is the nuance. Catch this. Catch this. To me. This nuance, it's not a heavy buckle around like we had on the daily up top with the wedge. Yeah, it's not. It is nuanced. Okay, bam, here you go. Here's your failure. Boom. This ain't going to work, right? What does that tell us too? Okay, so that's a valid line. It's telling us it knew it was there. It made tape, right? Yeah, our ascending triangle made tape. History. Good. Okay. What does that remind us of? Well, just a little bit of... This is interesting. Very interesting now. That little hook up and around provides us with a little bit of a remnant of this. which is an interesting kind of message to send. This is a little more prominent. It seems a little more prominent as you get in and you zoom out. I hope you guys have this on big screen. I really do, with high resolution, and that it's coming through decently, right? Because this is an interesting message to achieve. You guys have to admit that's an interesting message. That nuance on the 1 hour being like, no, we do know this is here, bam, just like right underneath it. We're gonna split off on the tail end of it. We know it was. We knew that ascending triangle was there, but here, boom. Just on the other side of it. It's like a partial reconfirmation kick from the inside of the resistance. Very interesting. This looping up, and this not as aggressive. This more like that, more reminiscent of that than, but very akin to this. And this is some heavy stuff. Let me loop in here and wham. Just fasten it, right? And out, wham. Very nice confirmations. Very nice, solid structuring. Like, not sure how people really operate who don't understand real solid technicals. And I understand that the majority of people really don't understand them. Or they're off in the Wizard of Oz looking for different chart formations or patterns or, whoever the wizard is. We ain't looking for the wizard. So this is interesting stuff. This will be interesting to see the message that's ultimately sent. Because we had this, huh? Andrew, you may get your kick, huh? Be cool, huh? Yeah, it'll be cool. That'd be real nice. And the odds are, The odds are this would just slam right into the golden pocket. Just the peak of this would be right in there. I love the dynamics. So it did, we have to say, Andrew, it did, huh? It did hook into this. Now the question is the hook into, and check this out. This is a good one. Is the hook into the overall expanding wedge? Because it did just break down out of that. And these are two separate wedges. We covered this one, and then this one broke out. We kind of gave it some leeway, and let's just talk about the broader concept, theory, everything else. But we've been stuck in this little, deal too long. I'm kind of like, we got a problem. It's like this is a little bit constrictive, right? Which might make sense for the potentiality of it could have been something bullish because it has been real restrictive, right? You would think that. Potentially it's like, things have been tight, We want them to run, do something, We need some volatility. We need something, some kind of action. I honestly believe that's the market pushing people out of the market. Let them roll. People who aren't here to really trade, let them roll. That's fine. Unfortunately, they or their friends will probably come back with more money next time to waste it and listen to people who don't know what they're doing and encourage them to buy at 60 or 65,000 or whatever the price will be then. Or this time later on, whatever it'll be. I'm not being negative. It's just that's the way it'll work. People show up with cash and they want to just distribute it. And hey, there's nothing wrong with spending money, having a good time. If they had a good time, hey, enjoy. We look forward to having you back. Not me particularly. I don't want you to give you. I don't want it like that. Like whatever. But I don't want to. Also, don't want to sell you like Bitcoin at 65,000, right? Like no. Like, can't we go on a boat ride or something? Like, that guy or whoever else out there in Dubai, like, hey, I got an idea. I bought like 10 Bitcoin from you. I lost it all. I want to go on a boat ride. It's like, I would do that. Like, you bought that? Oh, man, come on out. Come out of the boat. Like, let's do something fun, right? So I'm just joking around. We have a good time here. But we consistently foster the idea that we need to be reminded about basic investing principles, and we enjoy it like a good investing club. VIP is just, we enjoy it. We like it. We push, good, rationale. We do have some fun. We have to have some fun. Have to a little bit. So I like this dynamic we have picked up on this. And Andrew, I don't even really know. I guess we do for the purposes of this double bottom. The double bottom just doesn't even really seem to want to square out. It's odd, huh? I think it's just due to the nature of the preceding level. And I guess because that one also pushed, I'm ready for this one to push. I shouldn't be. I should square that up. I should be right on with it. It'd be technically sound. But you know what? No, I'm right. It does want to push. That's important, isn't it? Believe it or not, you don't even know how important that is. That's a big deal right there. I don't know if you can see that. See those yellow lines right there? This is how technical I am. This is why we get good results all the time. And if and when we change an opinion at all, just see that on the right here. If and when we change an opinion at all, it's because I've had an extra, who knows, 8 hours to go over a chart. And it would have been nice to have the 8 hours in the beginning, but I didn't quite have the 8 hours to start with. So now that's not parallel. It's not. This is not parallel. It's not. So it is, by definition, thus far, an expanding wedge. And when I draw it like this, it's literally just killing me. It is trying to push me. I'm telling you, the program, everything else is like, no, 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 no. I have real good eyesight, guys. It's like, no, no, no. You need to push that down. I'm just telling you, when you look at it from just don't worry about it. That is literally, it's an odd feature of the program. I'm going to say that. It's just pushing that down. So it's interesting in the context that we just had this right here, this expanding wedge here, that it's textbook, literal textbook, continuation, move to the downside. No problem. We're ready. We'll be ready. And we'll have a good time with it. I know we will. We'll tear it up. So that's the expanding wedge. We've thrown in what Andrew recommended. I think it's been well worth the time to fully analyze it. It's been great. This ascending wedge, we can probably park right here. And I assume, Andrew, with this hook here that I have, for all I know, I've been talking about the wrong ascending wedge for the last 30, 40 minutes. I believe that this is the one you were referring to. It's the one that I have seen before. Can you believe how hard the guys in Dubai just got wrecked? I mean, again. Because everybody last night, well, London, we don't really know because they went long. I mean, good gosh. They just got hammered. I just bring them up because I just don't like people losing money. I mean, with me, it's like pepper. Pepper. I mean, continually just pepper lightly at the top, Just, that's just what I hear you guys saying, right? I just repeat what you guys say. So does any of that help us understand as a group where on the aggregate, or if we zoom out on the daily, where we're going? I tell you, it helps us to the extent that we were able to define where we just were and where we've gone, and with a nuanced hook to it and kind of a floating wedge, right? Or another floating expanding wedge, or a floating rising wedge here. And I say floating because it's an interesting dynamic as we look at, this is our breakout. This is our pour out session here. We've gone up into something that's going to just, so it's no save whatsoever in terms of achieving this. It did break out, and it's been just, literally it's a nice expression of the price and the breakout action. It's like it has time to really do what it wants to do. To tell you the truth, it really does, huh? You have to give credit to the entirety of the price action of Bitcoin, it must be the public and the exchanges and everything, that it's really behaving as if it has enough time to really just elegantly do what it needs to do in terms of the pricing. doesn't it? Because everyone else is in a rush. We want the pricing action. We want the this and that. It's just telling us what this is going to probably do. Wall Street would tell us what it's probably going to do. The New York Institute of Finance would tell us, and it just has this nice even keel approach. And along the way out, we're going to hook up into a bit of a rising wedge and remind everyone right here whether or not that is the intention here. And I love this signal. It's very subtle, but very, very, very almost, severe. Because were this to now hook here, if this decides to hook here, it becomes a really elegant discussion in terms of we've made it an elegant discussion. I'll say it because we know that this decided to hook up in here. Yes, the rising wedge, right? Yeah. So do the diagnostics, if you will, in terms of how much or how severe of a drop, how significant of a drop and correction it received. It must have been really due for that correction. How great, huh? That it achieved this up in here, and we have these strong signals. Now, yes, this is all part of the flow. This is all part of the pricing dynamics. These little buckles right here, wham, wham, confirmations, right? Beautifully achieved. And when we see that here, we begin to ask, in amidst the 45 days that this has taken, it's like the expanding wedge, yes, okay, yes. And on its way out, on the way down, it's not in a rush just to pour out. And we didn't know how it was going to look. This is what's nice. We didn't know how it was going to look when I brought this up and we talked about, well, yes, indeed, we have a expanding wedge. It is a continuation pattern, 1, 2, 3, and down. This is just part of the down. We didn't know what it would look like. And it's very interesting that it's just taken its time, and now it's in an expanding wedge. I'm going to say a rising wedge within an expanding wedge. Thus far as defined by the technicals. The lower line of support by the real close double bottom. We'll give it a double bottom as well as the lower line of support. Double bottom here was beat. Same formation, same initial formation essentially, in terms of the establishment of the base of the wedge occurred here as well. So we're wedge on wedge. So this nice flow is what I like. This nice flow into a different pattern because we really didn't know what we were going to see because that would have been a really drastic kind of move we were thinking. That's a lot of ground to cover. So it's given us this in the meantime. It seems like to go ahead and go down. And we don't have too much of a problem. I'll tell you, we don't have a problem at all discussing it either way, understanding the academic components of both sides. It's difficult to imagine not believing this would want to go down some degree, or at least having that argument, because we just had one of these right here. We just had an expanding wedge right here, this wedge formation. We just had that. And it just did what it was supposed to do, which is cruise down. This, Andrew, may, if it's going to also go down, what a complicated price structure it could become. It could either become a little bit more aggressive if it were to express itself similar to the top line expression, the top wedge expression. That's an aggressive move. You can really see that wedge now, huh? When you zoom out like that, nicely done, huh? I can see it much better that way. When I just look at it like that, yeah, that's definitely nice. So it could be aggressive like that. It could also be something that continues to maintain in the wedge, and it could be a reversal in line with the double bottom and the rising triangle, the ascending triangle. This is the nuanced kind of message that I'm interested in, this nuanced message. One of the reasons I like the market. It is like that. It is that code, that cipher that journey you go on in your own life for the conquest, right? For the treasure, for the hunt and the thrill, the seemingly impossible. It is that. It's all that. It's interpretive. It's sometimes high stakes. It's nice stuff. We really enjoy it. Everybody enjoys it. I really am glad that you guys are members of the VIP. I really appreciate that. It's cool. You're a good group. So I hope you appreciate all those nuances that we've gone through. Andrew, thank you for your contribution on this. I hope you appreciate the additional wedge and the drop down from the original here. It's like hand on hand. If you hold your hand out in front of you, like with the left hand, the palm facing you, the right hand just underneath it with the palm facing you, parallel with the ground, just kind of, facing you. Just like, hand on hand. This is like, this is a measured step. The one on the right, it's like we had this here, and this here is a completely different ball game already that we're not really appreciating, are we? We haven't appreciated it like this. Well, no, this is a complete fallout. This was the breaking point right here, and it looped us up into a lower level. What an interesting step down. It's a very interesting step down. I like it. It's a nice move. Nice move with a rising wedge. Very interesting. And that we're breaking it on the daily. I want to turn on the wicks for a second. Interesting. Because we've been over it a few times to about the same degree. Yeah, let's go. We looked at that. We've been over it a few times to about the same degree. It knows what it's doing. We know that. True. Let's see. So yeah, trying to trade this has been tight. If we go up into here by chance, it's going to be tight. I do believe that, and you guys know the expression of I don't necessarily want to wrap this up with extensions on every other side of it. I can do that. We can start to trade the heck out of this thing. We can wrap it up in an iron cage. I don't necessarily want to do that. I just tell you, we can. I don't necessarily want to. We can stop the stream and I can just go attack this thing. You guys can attack it. Everything else is like, we don't need to do that, right? There are guys doing that. That's fine. Let them do it. We have fun doing it sometimes. But we did get into it, didn't we? We have to kind of say we did get into it. We went after it, huh? I have to bring that up on behalf of the group. We really did a great job. Killed it, huh? Absolutely killed it. And I don't mean like, I just mean that we literally we tore it up. We had a good run up through here. Really enjoyed all this, huh? Absolutely, just really. And I know this was an ascending triangle. We did break through the top line here. And we did wait for that confirmation. And that didn't get there. So I know that essentially the manpower was there for sure to trade up and do well. I know that for a fact because we were a part of it. Without a doubt, the manpower was there. We were there. I know our team, we got some manpower, guys. And there's tons of guys, there's thousands of guys trading, but we got some good guys. I know we were slamming through that. Like there were some good traders on it. That's it. I traded this very well. Very well. And to this portion. Didn't get the confirmation. And literally was invited, if you guys know it gave this, we were invited to take this all through here. Fun, 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 fun. So I guess it didn't have the support. It didn't have enough buying pressure. So this line can be out here. We can give it some more room. We can just draw it through the middle, kind of relax about it. the big picture item is bearish, is pour down. We still have an ascending triangle. Exposure's nice. It's always nice to move to the upside. It's always nice to hit your Fibonacci's. Yeah, I'm prepared for lower levels and have cash available, just like you guys always say. I agree with you guys. It's not nice to watch people get cleaned out. Now, if there's some guys, maybe they have it coming. This kind of stuff, it's just a little dramatic. I got to tell you, it's a little dramatic. When the whole thing's going up and we're pie in the sky and we're finally going to do something great, they can't even just consolidate. Can't you consolidate something and do something interesting? But I guess not. I guess there are more orders. That's why it's nice, because it seems like they just have their time. People just have time. But there are more orders down below. Yeah, there's more orders down below. So those orders will be there. We don't have to get there. It'd be nice, but we don't have to get there. In the meantime, we'll have our channel trades. We'll have all kinds of fun stuff. But you have to maintain discipline, guys. You really have to maintain discipline. I'd say you really have to maintain discipline. Because some of this stuff is just, I don't know. Some of it, you're going to get completely burned. Like, seriously burned. If you trade this incorrectly, or whatever you're trading incorrectly, if you trade it incorrectly, you're going to get burned. And you're going to lose money. And I don't want people around me that are losing money, because then I lose my friends. Right? I get to know people, they can't handle the cash they're handling, and then they think they can, or they just want to. And it's okay. If you guys don't want to remain in the market, just roll heavy. Go convince yourself that you have earned the steel bowling balls that you're going to go to the bowling lanes with, and you're going to roll and play with a big, huge 100-pound steel bowling ball, and you're going to convince yourself that's going to be the trick to getting down all the pins. That's it. I need a 100-pound steel bowling ball to go take down all the pins in the bowling alley. That's it. That's what I need. I'm a tough guy. I can do this. Oh, okay. Well, all right. Just an example, but honestly, that's about how it gets. So as we look at this, just, I don't know. I like what you guys say. Some of you guys say, just kind of tread lightly, pepper at the top. There's nothing wrong with peppering at the top right now. The risk-reward ratio, the risk-reward ratio, as you look at the reward of lower prices, of a potential repeat cycle, okay. I like that reward. I don't so much like the risk of over-involvement of capital at this level. No, I love trading the heck out of it. It's not that I'm not invested, like in life, period, overall, amongst some different things. It's not that I'm not going to discuss things. But in terms of this, whether or not you have $1 million, or you have 2,000, or you have 500, or you have a book and you want to learn, the beautiful part is you understand the dynamics, and you can coach yourself to where you can be capable of managing an account that's worth millions, or potentially you'd want to go do this full time for yourself or someone else. And that just requires a different approach, right? So you guys can do that. I know you can. And that's where the group comes in real strong. And sticking with the group, I will tell you, is going to be awesome, because you're going to reinforce the whole dynamic of getting through whatever comes at you. Whatever comes at you in between here and there is going to be phenomenal. If it takes a long time, we're going to get it. I want to see you guys get it, all right? And don't give up on you. Not for me. Don't give up on you, because the repeat cyclical nature of this market, And don't think someone's just going to come up to me and tell me that, just like I'll pull up a coin here or there or something else, 2 or 3 coins, right? I'll just, consistently every week or something, I'm giving you something with incredible price action. You guys know that. It'll max out at 2x or 3x or 4x or 5x or whatever in the world, right? I do that consistently. On the week, more or less. You guys may do it too. So it's not easy. It's interesting. People just want to make a 2x period. Well, it's not easy. You have to play the thing sometimes. You got to play it. I want you guys to figure out who has the hot hands. I want the coin. To tell you the truth, I want to see you guys with the coin that goes around and has more volatility and just unbelievable price action that you have to manage and control, potentially even at a really, really light level. However you choose to go. Some of them have made phenomenal money, right? One I brought up this morning was what was that, ONC? Was that ONC? Let's see what it's decided to do. ONC, OCN. OCN. There we go. Boom. Ouch. Is it or is it not? Ouch. I don't know. Where'd you guys get in? Where'd I bring it up to you? I brought it up to the group right here. Where'd you guys get in? Well, we, see, if you got in when I brought it to you, it was right here. Where is it? Well, it's right here. Because that's no fun. But you would have had to trade the heck out of it. I'll tell you that much. You would have had to trade the heck out of this. Either have a stop loss in order. Great idea. You know how to put them in? Okay, you know how to put them in. Great practice. So what we're looking at is a beautiful opportunity to gauge something that moved phenomenally quickly. But within a gauged level of it's going to wait 5, 6, 7 hours to let you look at this and what you want to do and how you want to set up and everything else. And so when this falls out like this and you're handling it and you got $200-300 in it, or you got 2,000-3,000 or 200, whatever you got in whatever K you got or whatever amount of money you have in it. You're managing this like you would manage your potential holdings if you're handling everything in the stock market. When, let's say, there's a flash crash in the stock market. Or you're managing it on the upside when you're looking at it and you're saying, well, no, I just got into an IPO or whatever else could be hot these days, right? I got in, let's say, London sent something, I got in, I just decided to buy it, see what would happen. I know it went down a little, but I bought more, got into 38.2, and then when you get into some really flying action around here, wham, to the upside, right? And this is just crazy, crazy volatility. And you're learning how to manage something and potentially it's huge experience. It's not about the get rich quick. It's not about the you never have to work again. That doesn't figure into the equation like hardly at all. That's not the excitement of it. The excitement is that you're a part of this price action. That's very exciting because you're learning how to manage things at a very, very intense level. And when you're able to manage things like this, when you're able to manage them like that, then you're going to go back to this over here. You're going to go back to this. And when Bitcoin is up here, this is going to seem like the absolute slowest thing, inexcusable for you or anyone to really get burned on. Inexcusable that you would miss this, that you would at any point in time lose out on this. And on the same token, on the run up, you will have experienced dramatic gains. You will have gone through that emotionally. It'll be a different amount of money potentially involved. But you'll already have been through that cycle of good volatility like here, particularly if you get into IPO, have to handle something else as well. Like this is just, the structuring of it's going to apply to anything you get into. So I see the experience of those coins as very exciting, as very, very worthwhile, believe it or not. Very few of them do nothing. The ones that do little may be some of the best practice as you change, much like us getting into a consolidated kind of area recently here where we had to change. This was nice volatility. Here we've had to constrict. We had to change. The market was frustrated, potentially imbalanced, right? We had to change the way we're, buying, selling, pushing. What's the best price? Now, I need a better price than that. Come on, boom, 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 boom. Cancel these. Pull up over here. New Fibonacci. Okay, here we have, whatever it is. Just boom, boom, moving through things, gauging the market differently. And so the lessons that can be learned are really phenomenal. So I'm really looking forward to you guys, continuing to view those opportunities as a big challenge. And just, take it like a challenge. See what you can do with it. That's exciting. So congratulations to those of you who had it work out. Because I know some people made some money on that one. All right? It's not all bad at all. I know some people made some money. Yes, they did. On what is it? OCN, whatever. It's not whatever. What's the name of it? I have no idea. CN, I don't know. It's over there. The one that I brought you this morning. Congratulations. I know that you guys did great. I brought like 4 or 5 new ones. I brought some for the overseas guys because they don't always get our coins. So I brought some for the guys in Belgium, the guys in Australia, and the guys all over. I was like, okay, I want to bring you a coin. I brought them a good coin. They were up in the money yesterday. They're up in the money today. Yeah, what's up? What's up? Yeah, flying high. What is up? That's good. I like that. Let me make sure they're in the money. Let me see what I got. Ooh, they had to trade that one. Now I'm like, oh, they had to trade it. On the 4th. Ooh. It did cruise up, and they have been trying. They're making money on this too. I know who's trading it. They're doing well. They know about their fibs. Yeah, that's good. On rebound, that's 30%. That's nice. On rebound, 30%. I brought this to the guys. 45% on a rebound, 30%. Good price action, huh? I don't care if they're playing with salt and pepper and investing in just the amount of salt and pepper. Just get in there and enjoy that thing. That is price action. That is nice. Look at that price action. There's a lot more where that came from on this bad boy. Look at that. Y'all see that? That's just beautiful. Look at that. That works. Guys, that's within a period of, what is this? A period of 54 days. We'll take it. Within 60 days, yeah, we'll keep an eye on it. Set some alerts and everything else. It's gone 200%, 100%, 200%. Like within, that's ballpark estimate from my memory. But yeah, that's Titan. 222%, 223%, and 126% within a period of 60 days. That's a lot of fun. Just learning how well you can perform in something like that is exciting. We're in crypto, right? We're not stuck in a Wall Street office, right? It doesn't need to be, it doesn't need to be careless, but it can be a challenge. I just have a question. If you could stand in front of if you play ball, you play baseball, something like that. If you could stand in front of the plate, okay, and I could set up with you, I want to let you go to either Yankee Stadium or just someplace where you really felt safe, right? This was a really quality setup, okay? I want you to go to Yankee Stadium, and I'm going to we're going to actually allow you to go hit. You get some time to practice, okay? We're actually going to let you go hit. I want to let you know the pitching machine, literally, we can turn the pitching machine up to like 100, 105 miles an hour, okay? Now, I'm going to do that, and it's going to be in Yankee Stadium. We don't have to have it at 105 miles an hour, but as much as you want this thing to blister at you, if you want to say you hit like a 100-mile-an-hour pitch in Yankee Stadium, right, it's not going to hit you. I guarantee you it will not hit you. It's going to go over the plate. It's the top pitching machine on the planet. The Yankees have the top pitching machine on the planet. So it's a 100-mile-an-hour fastball straight down the middle. And if you want to hit it, if you want to get in there and hit, would you do that? I'm the kind of guy that I would prep for it. I would want to go. I want to sit there at Yankee Stadium, and I want to sit there, and I'm like, yeah, I'm gonna hit that thing. I don't know. I kind of want to hit it out of the park. The faster it goes, the more maybe I'll hit the thing out of the park. Right? That's how I am. You line something up, especially if, okay, now I'm no, especially because, no, it's not going to hit me and anything like that. I don't want a pitcher like up there, like I don't belong in the park. Maybe you want to hit me. I don't know. It's just a weird dynamic. Like, not necessarily like the idea of a 100-mile-an-hour pitch just flying at me. But if it's in Yankee Stadium, it's controlled. I know for a fact it's good equipment. It's certified on all this different stuff. I'd love to dig in with my cleats. Love to. What if I hit a home run? I've hit some other stuff along the way. Some other stuff. So maybe people didn't get involved here. What's nice about this on Titan, for instance, as a matter of fact, literally, it was all, and you guys, you heard this, literally, it was all about retracements. Literally, all about retracements. The notification this morning, boom. Beautiful practice. Letting something engage in your target immediately, letting it go up, feeling the price action, the dynamics involved. I mean, that's like, that's maybe not a Yankee Stadium, but that's nice. It's a baseball. It's a U.S. baseball team. Deploying your targets is 2 seconds. Bam, bam, right? That's important to me for people to experience that. And you can't find this everywhere. It's price action. Well, it's down. Well, it's up. Well, it's, if it's been really up and it's going down, I'd be interested to know if it's going to go up. Let's see what we got. We got a new member, looks like. Let me check out. Nice. Looks like we have an entry. What do we got? Check out my files here real quickly. Hope you guys are doing well tonight. I know it's a small crowd. It is a holiday, which is a good thing. We have a good crew. Over 100 VIPs have joined. They joined the first month we had over 100 VIPs. That's our top level, $99 a month level. And you guys get exclusive access to all the pricing targets, to all the domestic and international coins that we put together. And guys, we're just hitting it out of the park. A lot of fun. When I say that all the time, I say we're hitting it out of the park. Now you guys have a reference, all right? Let's see what we have. Let me go to the information and check in who just decided to become a member. I'm excited about that. Great news. Let me check the official information from YouTube. There we go. And it looks like Kathy Murray, restricted VIP zone. Want to make sure that name matches up with what we just saw in the chat. Ricky Hale. Looks like Kathy Murray. Was that Kathy Murray? I wasn't looking at the screen. You guys can remind me if it was. Welcome and congratulations. We are with the VIP. Very nice to have you. Pleasure to have you. You're with the right group. We look forward to all things good as pertaining to you and your involvement with VIP. We're just killing it. We have a bunch of professional, former investment bankers, former finance professionals. We also have everything from blue-collar workers to business owners to some real King Kongs in the crypto space. Definitely. Good to see you, Ricky Hale. James Bond in the house. Nice to see you. We've been talking about Jason's Lit, helping out Jason. He's helping out us. He's in the military, U.S. military, and he's teaching some guys some different trading tactics as well that we're going over here. So our message is spreading to the U.S. forces. We love our international partners as well. Joint Force. Yeah, thanks for that, Andrew. Let's see. Andrew, can you copy whether or not that was, do you know whether or not that was Kathy Murray, huh? Kathy, we're very excited to have you. Let's see. And we have James Bond in the house. I see Jason's Lit with a question. Can you check Doge out? Yeah, I can. Yeah, there's Andrew. He knows. He's like, I'm excited for price action in either direction. Let's see some 20 to 30% days. You got it, man. Move the price. Yeah, when it's just sitting there. Oh my! I mean, seriously, when it just sits there, sometimes I'm just like, come on. We're in a market. Someone's doing something. If it's gonna sit there, take it off the exchange. Honestly, don't let it just sit there. Don't force people. I think it's inhumane. Honestly, there's something about it. I think it violates some ethos or something in terms of it shouldn't be permitted for people to waste their time on something. And you're wasting your time if you're not in a position where you can win or lose money. I mean, it's just, you're not trading then. You trade to get out of a position if you're going to lose money. You trade to get in a position if you're going to win money or gain money, profit money. So here we go. Does it really want to do this with us? We already went through this one time, just so you know, on Titan. Titan's an interesting coin. But, my brother's in Australia. James Bond, I brought this to your attention, my friend. I want to see if this formulates a symmetrical triangle, in which case we would expect it to be a continuation pattern, potentially. We would want to wait for a confirmation to the upside or the downside and enjoy that fantastic volatility. If it breaks down, we work on the Fibonacci's because it wants to break up again. 1, 2, 3 times, 200%, 100% to 200%. Very nice. So we will see. We'll see what we got here on. Looks like Jason wants to check Doge out. Be happy to do that. Doge is in a descending triangle. And that's a tough pattern to hold. It's a bearish pattern. That's not my opinion. That is a fact. It's just a fact. It can be beat, but that is what defines a descending triangle, is that it's bearish by nature. So that is the circumstance that it finds itself in. We have Fibonacci's underneath it. I think, Jason, you've got more pricing targets than you know what to do with on Doge. All of our VIPs do. So ready to redeploy. It's been consistent, hasn't it? You've gotten some trades out of it. That was nice to see. James, I'm not sure whether or not you can use. Let's see whether or not you can use. Let me see. Can you use Huboi? HUBOI? I'm not sure that you can or cannot use that. I think they got rid of their subsidiary in Australia, Bond. Excuse me. But if you can use that, I believe you'll be able to trade there. Yeah. Or is it Huobi? Yeah, Huobi. Huobi. I know they got out of, I believe, oh gosh, what is it? They're Korean. They have facilities in certain countries, including Hong Kong, but they do not have China. China canceled them. So some people may view that as a positive thing. Bond, China canceled them. So they're out of, I think they're in the Liberate section of need to go there and buy Titan coin for everybody who's wanting to buy it. I don't know if that's allowed anywhere or not these days. Today is the land of the free, home of the brave, kind of United States and our friends. That's a good thing. We're happy with the levels of freedom we have. We appreciate them very much. Thank you to everybody who is providing them. I'm going to set some alerts on Doge so that we know when it moves up or down. And we're prepared for that with pricing targets underneath at all times. Just at each point in time, we're prepared with pricing targets. The goal is to book positive trades, period. Book positive trades on retracement or accumulate if you choose to accumulate. And you guys always talk about like doubling and tripling down. You'll see a similar pattern if anyone wants to argue and say, no, it's not, that's not bearish, right? That's not a descending triangle. There's no problem with that. Come on. All right, well, here's one. We had a descending triangle here. That decided to go down like this. So a lot of liquidation on Doge. Really seems like someone was just selling Doge, huh? You ever thought of that? You can't get too much positive price action. Doesn't it seem like someone's just really liquidating the entirety of like a lot of different coins? They're just really, really pouring out after it got to a nice level. Maybe they're just like really selling all this stuff. I mean, why else it would? I mean, what else would cause all the pricing to go down continually, like 80%? I mean, people just collectively taking profits, maybe. Excuse me, we reached kind of a maximum. It's possible. Very possible. Okay. Let's take a look at from alpha to OCC to AMP to Nord to... All right, well, it looks like we're doing pretty well. Looks like we're on the ball. Let's make sure we're on the ball with BTC Bitcoin. I can't look up Baby Sheeb. I wish I could. I really like the coin. I think I'm gonna. We're all gonna enjoy that when it gets to a penny or $1 or whatever it is. I mean that. I really will. I'm gonna buy it when it gets to $1. That's my goal. I'm gonna buy it when it gets to $1. I'd like to do that. I really would. So. This is our rising wedge on BTC. I have to reframe. Focus. Reframe. Our rising wedge. And yes, we have lost. Let's see how much further. Have we poured out further from where we were? Let's just reframe ourselves around this this rising wedge, which we've kind of moved to instead of, I'll just say instead of this ascending triangle. We just kind of know it's there. I guess we can question the degree to which it is there. Because you see that hook there on the top, Andrew, etc. Jason, yeah, it's kind of like it is there, right? That's the thing. It is, right? We you know, it just is. So is the line of resistance or whatever is above it, that 36.5, right? Yeah. Very appreciative of Kathy and all of our new VIPs. Very, very thankful. So, yeah, just really, really appreciative. There is a good group, and let me see. Let me see. Wow, yeah, it really is. Whoever's talking about Baby Doge, it has gone through the roof. It's gone through the stratosphere. Congratulations. That's exciting. It's done well. I look forward to it doing continually well. It's still very, very inexpensive. I'd like it to really get up there. It's at 6 or 7 zeros, but it did go up 4 or 5 times in a day. That's nice. If you could catch that one, I don't disagree with you. Baby Doge. That's a good one. That's nice. I like it. I'd like to make one of those. I don't see any reason not to, to tell you the truth. If they're fun, if people enjoy them, I don't see why not to make one. Seriously, if people enjoy them. But I don't want people to lose money on them. I definitely don't want that. Let's see. Yeah, if anyone did, because I sent out a little text message to people or something like that on Twitter about Baby Dogecoin a while back. That was exciting. But, yeah, it went up, I think it went 4x or 5x today. That's all we need is another video about something that went 4 or 5x, huh? There we go. Was it 1? I'm just playing with you. 1, 2, 188. There's no telling. That thing just skyrocketed. It went to the moon. It's back, but it did. It went to the moon. There's no doubt. It was quite an experience, that one. All-time high, wasn't it? Baby Doge in the house. That's nice. Nice accumulation. Someone really accumulated that. That's good. So we're looking at just the pricing. I have this lined out with all different types of channels, everything else to help me trade it because I like, the different parameters that I'm able to use with TradingView. You guys know we use that all the time. So, yeah, we really busted out of that. We just did, huh? It's fine. I'm ready to trade it. So I guess what we will do, I always tell people to eat well, sleep well, and remember to invest in those relationships that you knew were important before you started investing, right? Invest in those relationships. So to that tune and that effect, I'm probably, let me see what I got. Unless Andrew or Jason, you guys have anything else that you think we need to cover or anything like that. Welcome to all the new VIP. Absolutely. We have a lot of new VIPs, guys. We got like Jose. We got, have you guys seen the new VIPs? Oh, you're gonna love this. I don't know if you guys know the new VIPs. Check out Jose. What's up, Jose? Yo. Jose builds. So you guys know, all you guys in VIP, so that you guys know, I have to show you this. Look at what he does. Jose's a talented guy. He's out in Atlanta. Let me get to it. Look what he builds. Hello. That's nice, huh? That's beautiful stuff, huh? Beautiful, beautiful architecture, huh? Nice stuff, huh? Quality stuff. I like that. So we have Jose. We have, I'm trying to think, new guys. We have Travis. What's up, Travis? Travis knows what he's doing. He likes relaxing days at the beach, I assume. Travis Johnson in the house. We have Christian Chavez, working his hand in the market. It's nice. We have, well, who else we have? Let me see what we got. Come on. I know we have more. We have a lot more. We have so many VIPs. It's a good thing. We're going to have more. We have Darren in the house. Absolutely, Darren, doing a great job from the United Kingdom. Welcome, Darren. Of course, welcome, Darren. Excited to have Darren. We have Miles. What's up, Miles? Good to have you, brother. We appreciate your kind attitude and everything towards us. You make this place a better VIP. I have to tell you that. Look at this control setup, guys. Hello. That'll work. He's into music, instrumentalities. You guys know Richard. Korea. Military, Army. U.S. What's up, brother? What's up? Yeah, so I think we have some more, and I'm probably missing them. Those are the ones that are on my front page right now. Longo, what are you doing, bro? What's going on, Longo? I want to say hello just because I see you right now. What's up, Longo? I like this background shot. It's just cool. I like it. So anyway, long ago, all the good guys. Angel joined recently. Angel's the man, pretty much. So we have just all the guys. Win from Australia. We just, it goes on and on. Matthew is, you call it luck, I call it blessed. So yeah, guys, all of our VIPs, from Carlos to the mainstays to guys, to Angel to everyone, we have the best group. That's just it. I know we do. I know we do because you guys are in it. So that's it. That's nice. That's good logic. How do you become a VIP? You need to join. You need to click that, click the join button on the main page. It'll be there on your desktop, not on your laptop or not on your phone. I'm sorry, your phone or otherwise. Maybe not on a Macintosh, but on a desktop. Click on join, then click on the restricted VIP zone, $99 a month, and we have just the top group. All types of pricing targets, all types of coins. We're pulling out 2Xs like, guys, every 2 days, 3 days, I don't know. Don't count on that because we have so much other stuff going on, but it's just all the time. We have back rooms where people are communicating. It's a good group. You'll like it a lot. That's nice. Andrew says he'll have to catch up on all the VIP chats and say hello to new members. Again, glad to have you all. As always, trade responsibly. Absolutely. That's the best thing. Trade responsibly. That's a great way to put it. And, some things are just, if you buy it a cup of coffee. I literally say that. If you just want to buy something, a cup of coffee, right? Just buy it a cup of coffee. But we have some really successful people in our VIP who have, you look at Angel in top right, who's supported at the level of 4,400. Very exciting. He's a great guy. Very successful in crypto. We think he's going to be more successful too. So, and Andrew at the bottom right is a key supporter, key leader at $500. We appreciate all of your, all of your efforts throughout the entirety, and we're really going to tear it up this month. We're at the 5th already, so we're at Monday. I will let you go, and you guys just take care of yourself and your portfolios. Prepare for lower levels by preserving your cash. That's what I hear you guys say all the time. I think I agree with that. And be prepared to double or triple down at lower levels. Be prepared to double or triple down at lower levels. Yeah, at each lower level. I like that. I hear you guys say that. I agree with that. Just to let you know, I do agree with that. So I think that's great. You guys have a great night. It's been nice to have you here. And I'll jump into the chats here back in the